Good evening, everyone. Welcome to the next virtual coaching class organized by Board of Studies, ICAI. Today's evening, we will have a discussion on this topic called returns under GST law. This particular topic, returns under GST law, I wouldn't say it is to be focused so much from examination point of view, but this is one topic which revolves around the entire gamut of compliances under GST law. So this topic, what we are going to have today's discussion, we will understand various returns which are there under GST law. We will see what are those GST returns. Is it monthly? Is it quarterly? What is the difference between a return and a statement under GST law? And we will see what is the detailed aspects we will discuss in today's evening. I'll touch upon a couple of examples before we start with this returns under GST law. I'll bring forth the examples which makes you to think when returns are to be filed under this particular law. Also, we will understand the purpose and how each of this return has to be filled up in your return. So when, as an assessee, when someone is filling this particular return, from where the data has to be filled, has to be collated, how that data has to be presented. As a registered person, how do we understand, how do we analyze that particular data? Finally, we will summarize what will happen if the returns are not filed in timely manner. So this is my overall coverage for today's discussion. Again, I would say, let us see what best we can learn from career point of view. There is one topic which we left in our last session. I believe this is on anti-profiteering. So I'll touch upon this particular fantastic provision called anti-profiteering. I'll give you the background of this particular topic, and then we will come back to our today's topic on returns. And you're able to hear me. Let me just have a look on my question window. Yes, Geeta, good evening. Please put onto the chat window if you're able to hear me and also you're able to see the presentation slide, so that I'll get a comfort in terms of going ahead with our discussion for today's topic. Can you please confirm on the questions window? Is everything okay to go ahead? The audio, video, presentation, everything. Yeah, please confirm so that I'll go ahead, ma'am. Yes, Dilip, thanks for confirming. Okay. Now, this topic called anti-profiteering is something which I've stopped in our last session called miscellaneous provisions. This topic of anti-profiteering, as the name goes, the government wants to ensure that no one should get profited at the cost of someone else. I repeat, no one should get profited at the cost of someone else. Now, this particular section 171 says, look, if there is a reduction in rate of tax or if there is a benefit of input tax credit, the same has to be passed on to the recipient to reduce the price of your supply. I repeat, there are two aspects which the government is checking. First aspect is, look, the rate of tax has been reduced. What do you mean by that? Assuming there is a supply which is taxed at the rate of 18%. If the government has reduced the tax from 18% to say 12%, government says that reduction in rate of tax should have been passed on to your consumer. A classic example. Say Hindustan Unilever, you have all this Ashirwad Atta or your detergent powder. Now, assuming the government GST Council, on the recommendations of the GST Council, there has been a rate notification where they say this atta which is sold with a brand which is being taxed at the rate of 12%, it should be taxed at the rate of 5%. So there is a reduction of 12% to 5%. There is a straight away reduction of 7%. Government says, look, you have a product which is sold with the MRP. Let that MRP be reduced substantially to reduce the benefit of that taxation. So government says, wherever there is a rate change, reduction of the rate, that reduction of rate should have been passed on to your consumer. That is what they say. So when we talk about the products which are sold with an MRP, now when we say MRP, when we look into MRP, this product says the product price is 155 rupees, all inclusive of taxes. That means whatever GST is applicable, the rate of that GST has been already factored into my MRP, right? So this MRP should have been substantially reduced because there is a change in the rate of tax. This is one situation or scenario they say. Second scenario, the benefit of input tax credit shall be passed on to the recipient. Now, I'll come to my Excel file to make you understand with this particular anti-profiting method. I hope you can see my Excel file. Let me see if there are any questions so far. Okay. Now, let me explain you this particular model of anti-profiting with an example. A fantastic model. I would say all of you focus this particular anti-profiting from a cost-cutting aspect, from a reduction of rate of tax point of view. All of you, once you get qualified as a chartered accountant, you're going to get into advisory, you're going to get into review, you're going to do your internal audits. Now, this is one particular area where we can look for cost saving. I'll give an example this way. Say, assuming there is a service provider. There's a service provider. What is the service? Like, say, passenger transportation service. Now, you have this travels where a vehicle is given for pickup and drop of your employees. I repeat, there is a passenger transportation service. When a company hires this vehicle, motor vehicle for transportation of passengers from a particular point till the factory, again from factory back to that particular respective points, the service provider picks up and drops the employees. For a moment, let us take that there's a tempo traveler. Given on hire. This tempo traveler, they say, per month hire charges, they quote rupees, say 1,20,000. They say my monthly hire charges is rupees 1,20,000 for a standard kilometers of say 3,000. They say you use more than 3,000 kilometers per kilometer extra. Say they charge 15 rupees. They charge 15 rupees. Let me just check this. 3,000 kilometers into 15 gives me, no, instead of 3, I think it should have been, say, 1,20,000, right? 400 kilometers. Let me make it as, say, 400 kilometers. Now, 400 into 15 gives me 6,000. Now, let me go back with this model. So 3,000 kilometers per month, I'll give you this particular tempo traveler. If you run more than this, I'll charge you 15 rupees per kilometer extra. This is what the contract says. Now, when I ask for the service breakup, the service provider says, so this is my standard rate card. I don't have anything beyond this. This is what they say. Now, if I see what is a cost per kilometer, 1,20,000 is what I'm paying for a 3,000 kilometers. I'm paying say 40 rupees per kilometer. This is the standard price which I'm paying to the service provider, right? Now, he says, this is my industry standard. I have been asked to charge this as per my this particular union. I cannot charge less than this. Now, we will say, okay, let's go with the rate. Now, is there any scope for cost reduction? Now, when you see there is a scope for cost reduction, this particular service provider, let me call this service provider as Mr. A, a proprietor, Mr. A. This service provider is a proprietor who is not registered under GST law. Now, we say, boss, you get into registration so that you get a benefit of this particular GST where you can give me the various benefits. So what will happen? This gentleman gets registered and he says, sir, I charge 5% as rate of tax because I don't want to get into complaints of audit and other things. 5% rate of 5% rate without ITC. Now, this is the area where we will say, look, when you buy a vehicle, there is a ITC benefit available. When you get the service activity once in a quarter, as per the norms, every quarter, there is a service which is required. Insurance. Now, I have insurance where I pay annual premium. Now, these are all the benefits what we say you could have enjoyed as benefit of input tax credit. Now here, if you look into the costing, this gentleman says, when you go in depth of analysis, he'll say, so the cost of TT, my cost of TT is say 8 lakhs. Now, this is the cost of tempo travel. Now, assuming all furbishments, etc., all extra fittings, on-road cost. This is a showroom price and say 9,60,000. I'll add 20% of this. He says, sir, my on-road cost of a vehicle is 9,60,000. Now, 28% is a rate of tax. For a moment, let us assume cess, which is taxable at the rate of 12%. I'll assume only CGST, SGST is chargeable on this particular activity. Now, if you see my vehicle cost, CGST and SGST, when I buy a new vehicle, assuming 8 lakhs is a cost, on that if I'm loading 18%, that is 9%. My CGST and SGST of 72,000. Next, every quarter there is a service which is done. Now, assuming that the cost of service is say on an average 40,000 per quarter, or say 50, because it's a yellow board, so let's take 45,000 per quarter. 45,000 into 4 quarters. This is a cost of maintenance on an annual basis. Now, on this, if I calculate 9% GST, the showroom person who is going to charge 16,200 is going to be my cost of maintenance. Next, insurance. Being a vehicle, when it is used for your transportation, insurance will be little premium. So let us say 60,000 is going to be the premium cost per vehicle. Now on 60,000, assuming 8%, 18% is a GST. Now, this is what my cost of GST, which is incurred per year. Now, this is one-time cost. This 72,000 is one-time cost, and this is annual cost. Now, this gentleman says, sir, the life is 3 years. Assuming this is going to be the same, total GST, I would say, in the span of 3 years, one time I buy the vehicle, so my GST is going to be this much. Into 3, let me extrapolate to the 3 years period. Insurance also I'll do into 3. Now, What is that I have done here? Total 2,73,600. 2,73,600 is a GST per one tempo traveler. Now, if I make a summation of this, my 3 years benefit of GST is going to be 2,73,000 per annum. 91,200 rupees is what I am going to save on GST per month. 91,200 is going to be the cost of GST, which was not factored as a benefit. Now, if I do on a monthly basis, I'm going to save 7,600 per month. Now, imagine if your internal audit cost is 10,000. Imagine if your internal audit cost is 10,000. Per month, you have given 7,600 benefit, assuming there are 3 tempo travelers. 3 tempo travelers into 3, 22,800 is a straightaway benefit which you have given to the assessee as a saving in cost. So why is that we are talking all these things? Anti-profiting. My mantra, my secret of anti-profiting has to be understood from this particular angle. Now, one of the good provision, how this is examined, I'll come to that a little later. But for you as a professional, when you get into practice, I would recommend look at your business, your client business from this particular perspective. See what is the cost of taxation. See whether the assessee is registered under GST. If the assessee is registered, is he passing on the benefit of taxation to the recipient? Now, this is what we do, a verification of tax benefits available, whether assessee has availed or not. So if at all, if this gentleman, Mr. A, has not registered under GST, or assuming Mr. A has registered under GST, but is paying only 5%. Now, why by 5%? This gentleman doesn't want to get into the ambiguity of filing of returns every month, collection of taxes from the customer, and getting the audit done on an annual basis. Now, he has a fear of audit. Now, if you think of fear of audit, there's a benefit of 7,600 straight away, which is getting lost by virtue of non-availment of input tax credit. So first and foremost, this is one fundamental which we need to examine. What is the scope for me to see whether there is a tax planning which can be done for cost reduction. So this is one measure we can think of, my cost reduction for the operations. Now, this is one model which gives me to think on something called anti-profiteering. I'll come back to my anti-profiteering. What the authority says, look, when there is a reduction in rate of tax, like example, your rate of 12% reduced to 5%, then my MRP should have the impact of price reduction. I don't know how many of you have visualized this when GST has come into picture. 1st July 2017, when GST has come into picture, there was a lot of advertisement. There is a lot of news awareness which is spread by the government of India saying that, look, we are coming into the GST era. We are going to promise that the rate of taxes is going to get reduced. Because of reduction in rate of tax, the prices of the commodities are going to reduce drastically. This reduction was made possible because of my section 171. If this section 171 is not there, this would have been a bumper bonanza for all the traders, retailers who have migrated from VAT era to GST era. Why? So why are we talking about that? Under VAT era, now if you think about central excise or service tax, this was never allowed as an input tax to that particular dealer who's a trader. A classic example, if you think of a steel trader, a person who is dealing in a steel products. Now, steel was subjected to central excise at the rate of 12%. Now, assuming there is a trader whose closing stock as on 30th June 2017. 30th June 2017, assuming the closing stock is say 4 crore 50 lakhs. 450 lakhs. Now, on this, straight away, there is an element of central excise which was never allowed as an input tax credit. I repeat, there is a benefit of central excise which was never allowed as an input tax credit. Now, if you recollect Tran 1, Tran 2, transitional forms. Using these particular forms, the benefit of input tax credit has been availed by most of these dealers when there was a migration from erstwhile VAT or central excise or service tax to GST law. Now, this was a reason why government has felt, look, I'm going to give the benefit of a seamless benefit of taxation. Whatever closing stock you have, when you have been migrating, I'm going to give you a closing stock benefit. That particular thing should have been should have an impact of reducing the selling price so that the recipient, that is the customer, should get a benefit out of this. So the government said whatever tax is there on your closing stock, this should reduce your operational cost and customer should benefit out of it. This was the main agenda. This was a main agenda which government has set. So first thing, reduction. When there is, this example is for your what do you call, benefit of input tax credit. One, if you are talking about goods which are sold on MRP basis, like all your Patanjali or Hindustan Unilever, ITC, all whichever products you talk, whenever the GST Council comes with a notification saying that, look, this particular products, the rate has been reduced from so-and-so rate to so-and-so rate. When there is a reduction in the rate of tax, the government said, look, please reduce the tax, the benefit of that reduction in rate of tax to the end consumer. Don't increase your profit margin. Now, I'll give example of this reduction in rate of tax. Reduction in rate of tax, I'll put it this way. Say, let's take example. I'll not name a particular brand. Say there is a honey, which is a branded honey. This honey, if you look at the sale, how it reaches to the end consumer, there's a manufacturer, there is a wholesaler, there's a retailer, and there is a, I'll put a distributor, okay, retailer and end customer. Now, retailer wants to have, say, 10% profit. Wholesaler wants to have 5% profit. Manufacturer wants to have 15% profit. 15% profit. Now, this is a markup they keep in their process. Now, assuming if the cost is 15%, as the cost is 100 rupees. Now, the selling price would be, now manufacturer wants to keep a margin, so I will say into 1.15. This is going to become the cost to the wholesaler. Wholesaler, we wanted to have a profit of 5%. So the selling price would be this into 1.05. Then this is coming to retailer where his cost is 120. Now here in this model, the transportation, insurance, loading, unloading, and some other valuation. For ease of understanding, I'm ignoring those ancillary costs. I'm just coming with a simple example. Retailer, he wants to have a profit margin of 10%. So into 1.1, I'm going to say 132. Now end consumer, now they wanted to make it a rounding off, and they would say, as of now, my GST is applicable GST rate, say 18%. Now, at the end price on this 132, 18% happens to be 23. Now, if I want to put the MRP, this manufacturer says, okay, now this is my costing model. There is a no cascading effect of taxes. At every stage, the benefit of taxation is enjoyed. What GST was charged by manufacturer, enjoyed by wholesaler to retailer. This is what is going to happen. Now, 156 is a landed price with GST. So to end consumer, my MRP rounding off, say 156 was made to 160 rupees. Now 160 was set as a selling price to the end consumer. When government says with effect from say 1st January 2020, for that commodity, rate has been reduced from 18% to say 12%. That means my selling price from on 132, my 12% happens to be 15 rupees. So my MRP should have been 132 plus 15, 148 rupees. How much should be the price reduction? 156 minus 148, 8 rupees. Assuming that a rounding of 3 rupee, 4 rupee, whatever is it, if I keep aside for a moment, my benefit of reduction in rate of tax, from 18% to 12%, straight away there is a reduction of 8 rupees. So the logic here would be, they say, you reduce this 160 by this change in the rate of tax. So MRP, whatever 160 is there, you affix, you call back those items, put a fresh MRP and then resell in the market, or pass a particular circular that this product cannot be sold more than this particular price. Now, this business is such a vast business. Once the product has gone out of the manufacturer, calling back that particular item and change in this particular rate tag is something which is next to impossible. If you think of Hindustan Unilever, you see that set example of Tide detergent powder. You have that 5 rupees small powder packet. From manufacturer's location, say example Navi Mumbai, it reaches to say Pune. Now it has crossed say 6 hands to come to the local shop which is there next to your house. From there, this packets to go back to Navi Mumbai is highly impossible. Or making a MRP sticker, circulating to all these people, getting ensured that fixing of MRP sticker is also highly impossible. Now, but government said nothing doing. What you have been doing, you have to change your prices. So whenever there is a change in the rate of tax, when there is a reduction in the rate of tax, you have to pass on that benefit to your end consumer. Couple of classic examples are there under 171. There was one SSC who was importing this cartridge printer. For printer, there is a cartridge. Every time when the toner gets over, the ink gets over, we buy a new cartridge. So there, what happened? There was one company who was buying this cartridge. They were buying at 750 rupees till, I'll put it, rupees 750 till 30th June 2017. Now, from 1st July, when he purchased post July 17, this cartridge was sold for rupees 830. Now they say, look, there was a benefit of customs duty. All along, customs duty was 12%. It was enhanced to 18%. This seller has increased the MRP. But actually, the virtual reality was when he was a trader, benefit of central excise plus SAD, special additional duty. We call this central excise as CVD. When that gentleman imports the material, the 12% central excise plus 4% SAD, 16% was the benefit of taxation, which was not passed on. Rather, showing to the customs rate from 12%, it increased to 18%. He straight away jacked up 6% to the end consumer. That is the point in time, the end consumer. Who? The end consumer lodged a complaint against the seller. This is a mechanism called anti-profiteering, where government said, look, when you have been indicated, when you have been directed to reduce the rate of tax, you should ensure that the benefit of that taxation should have been passed on to end consumer rather than you enjoying that particular taxation. So friends, there are two occasions where my section 171 will be called for. Again, I'm not talking from examination point of view. I'm talking from your career and your understanding of the concept, which can be applied once you get into your cost negotiation. as a part of corporate, as a part of your service, when you negotiate with your supplier, you'll try to understand what is the supplier legal position. Has he been registered under GST? What benefits of taxation is taking? Is there a scope where I can reduce that particular tax? Can I demand my supplier, look, you produce these documents and give your cost sheet. Based on this, let me revisit. Reason, you are going to give a continuous business to your supplier. Could be a job worker, could be a manufacturer, could be a service provider. Whoever it is, you can take the benefit of this concept called anti-profiteering to think or examine how it can help my business in terms of reducing my operations cost. So first point, reduction in rate of tax. Second point, benefit of input tax credit. Like I gave one example of this renting of a motor vehicle where per month there is a cost benefit of 7,600, which is possible. So friends, this is one concept of anti-profiteering, which the government says, look, you pass on the benefit of this particular anti-profiteering to the end consumer. Now, before I go further, let me see if there are any doubts on this particular technical aspects what we have discussed till now. Now, anyone has any doubt with respect to this costing, etc.? Let me know so that I can clarify on these aspects. Okay. So far, so good. Everything is good. No questions raised till now. Let me come back to my presentation. Yes. So government says, look, I have given two measures, reduction rate of tax, benefit of input tax. These two aspects shall ensure that the benefit of taxation has to be passed on to the recipient. Let me come to my annotation. So the government is very clear. You have to pass on, shall be passed on to whom? To the recipient. Now, if you look from your recipient, if the recipient is registered under GST law, the cost of taxation is not going to be a burden, When we talk about end recipient, now all of us, for our survival, we need to buy multiple items, which is not in course of a business. I need to buy grocery items. I need to buy electronical gadgets. I need to buy household items. Take a classic example of your electricity bulb. The tube light which gets fitted at home. Like all the CFL, etc. These are all classic examples where government says there's an enormous benefit of GST law, which should have been passed on to the recipient. In case if you have been aggrieved, if you feel that your supplier has not reduced any taxation, sir, how do I get to know that my supplier has enjoyed the benefit of tax and rather he has not passed on that particular benefit? Look at your bill. Pre 30th June, post 30th June, bill on 30th June 2017, bill after 1st July 2017. When I say these two things, there should be a impact of either of these two elements. Now, this is what my GST law talks about here, anti-profiteering measure. All of you are in third year of internship who is going to write your exam in coming May 2021. Now, this anti-profiteering, you would have tested in your financial audit when you're doing a statutory audit, when you've been doing a statutory audit for the financial year 2017-18, was there a benefit of input tax credit? If there was a benefit of input tax credit, did the company has taken enough measures to pass on that benefit to the recipient? Sir, how do I know the company has passed on? If you look at the bill, they'll say value of your atta is say the 45 rupees per kg, less benefit of transition credit 2 rupees per kg, net price rupees 43. They should have indicated on the bill what is the benefit per unit this assessee has enjoyed. That particular price of per unit should have been quoted on my tax invoice. So friends, I would get to know who I as a consumer would get to know that my product has been reduced because of there is a change of taxation. Classic example, there was this Maggi noodles. One of the consumer has lodged a complaint. Sir, I was buying Maggi noodles 5 rupees per packet. Even after GST, it was 5 rupees per packet. It was not a joke. One of the consumer has raised a complaint that across India, everyone is saying the prices are reduced, you say Maggi noodles, it was 5 rupee per kg, 5 rupee per packet. Even after GST, it was 5 rupee per packet. Poor fellow who was buying that 5 rupee Maggi noodles, he lodged a complaint. Anti-profiting authority took that seriously, and they have reverted back to Hindustan Unilever. Then they have come back saying that earlier it was say 100 grams. Now we have made as 120 grams. What we have ensured is 5 rupees remains to be 5 rupees, but that 100 grams was the quantity was increased to 120 grams because of the operational issue of 6 rupee 20 paisa or 6 rupee 30 paisa. This is the justification which was given by Hindustan Unilever. Later, the authority has written back to the consumer saying that, look, you have put on weight because of that 20 grams which was added because of this price reduction. Just on a lighter note, they say that, look, the assessee has the benefit of that particular taxation, the benefit of that taxation should have been passed on, should have been indicated on a tax invoice. This is what the government has mentioned with respect to my anti-profiteering. Now, the government shall constitute an authority to examine whether input tax credit availed by the registered person or that reduction in rate of tax actually resulted in commensurated reduction in the price of goods. Now, this is one fantastic aspect where there should be reduction in price of goods and services will be examined by the authority. Now, this Maggi noodles was a classic case where it came in all the local newspapers saying that one consumer was not happy with Maggi noodles. Now, we all know that there was a news that this noodles has got a plastic component because of which everyone has banned noodles for a point of time. After that, again, these manufacturers have taken multiple measures. They have come back saying that, look, we have taken care your safety, your health measures, and then we have brought in these aspects. That was a point when the local newspaper, this advertisement started coming. Someone was not happy with Maggi noodles. Now, this aspect was looked from the department, this authority. What they say, just because a complaint has come, we should not say that there was anti-profiteering by the manufacturer. We should really examine. How do we examine? We will call for their cost sheet. We will call for their certified financials. There is a cost audit report, CARO. Your cost auditor's report. Get that cost auditor's report. Get a cost sheet. Let him prepare a cost sheet prior to 30th June, after 30th June. When I look into the cost, there is something called prime cost. Now, can we see that there is an impact on my prime cost? Once this is established, then we will say that there is a price reduction commensurate with the change in the rate of tax. That is how this authority said, let us not admit all the cases which come in, whoever come and file, let us not take those cases. We will actually see the impact and then only we will take a action on those particular suppliers. But I still remember this Maggi noodles was one fantastic case where the authority concerned, they have written back, my dear, this particular applicant, please check your weight. There was a 20 grams which was got added. Because of that, whether you have actually put on weight without knowing that there was a additional 20 grams, you have been consuming regularly your Maggi noodles. That's what they have concluded that particular assessment. Coming back to our discussion, they say, look, we will do our, there is an authority, I'll talk who is there in an authority. This authority who have constituted, they will say, I am going to examine your records. Now, when there is an applicant who filed an application saying that there was a price reduction which was not passed on, for me as an authority, I have to confirm. Now, you confirm through your books of accounts, you confirm through your cost sheet, you confirm through your bills. Now, whether you're importing that material, you are procuring domestically, who was your supplier, who was your money, from where you have been importing, what was the rate of duty structure, post and pre, and did it actually resulted in benefit of reduction in price? How do I get? I'll take a certificate from a chartered accountant or a cost accountant saying that this is the cost of operation prior to GST, after GST. And this is a business model where he was registered as central excise, he was registered as service tax, he was registered under VAT. He has been taking the benefit of all this taxation. Prior to GST, post GST, there's no impact. Everything is same as it is. So when they establish all these things, then they'll say, yes, you have been anti-profited, or no, you have not been anti-profited. Now, if assuming for a moment, it has been established that you have been benefited, what happens? If at all that any registered person has profited, then that person shall be liable to pay penalty equivalent to 10% of the amount so profited. They say, look, I am going to prepare a cost sheet. When we go back to our example, this example of steel trader, we said that on closing stock of 4 crores, around 54 lakhs was the benefit of my taxation. Imagine, just visualize how much time it takes to get the benefit of 54 lakhs. When no one should get benefited at the cost of taxation. After all, what is taxation? It's a levy by the government. Where does the taxes go? It goes for the purpose of my investment on the general public at large. So the money which is pertaining to the public at large should not be enjoyed by any businessman because of the tax mechanism. So here, assuming that you have been enjoying the profit, like example of the trader, where closing stock was 4 crore, 4.5 crore, on that 12% when we calculated, roughly around 54 lakhs was the benefit of central excess which was there on the closing stock. Assuming it was established that you have enjoyed that 54 lakhs, you have not brought that 54 lakhs as a reduction in your pricing. 10% of that amount I would collect from you as a penalty. That's what they say. Provided no penalty is required if you deposit that profit amount within a period of 30 days of the passing of order. They say within 30 days of passing the order, you come and deposit that 54 lakhs with the authority. Then authority says, I will not levy a penalty. That's what they say. Now question comes here. So everything is good. 54 lakhs, the gentleman is going to come forward and give to the authority. What will happen to that 54 lakhs? That 54 lakhs, if there is a independent 1, 2, 3, 4 buyers who have been identified, that money will be given to the buyers. Now, government will not take a responsibility of going with the business, taking the sale invoice, identifying whom I have to give. That will not happen. If an applicant comes and files an application, that particular application, it is proved that yes, there is a benefit of taxation was not passed on. Only to the extent you have been your proportion has been aggravated, to that portion they will pay. So out of that 54 lakhs, you belong to 1% component. That 1% will be paid back to you on the basis of purchase bill, which you are going to provide. Now, this money, assuming there is no person who is identifiable, that will be transferred to Investor Protection Fund. It will be transferred to a fund called Investor Protection Fund. So state government, central government, that will be put into that particular deposit of fund. It will not be given to any individual parties. Next. As I said, there is an authority. As of now, government has said from the date of commencement, that is since July 2017, 4 years, they have given a time limit for this authority to continue. As of now, if you see the composition of this authority, there are 4 people who are technical members. For these 4 people, there will be a chairman with 4 technical members. These technical members happens to be a commissioner or equivalent cadre who worked with various departments, Commissioner Customs, Commissioner Central Excise, Commissioner Service Tax, or Commissioner VAT, etc. So this authority is constituted where a chairman who is not having a rank less than Secretary to Government of India, and 4 technical members will be constituted in this particular committee. So this committee is a ultimate authority who takes a decision and passes an order. As of now, for your knowledge, 4 years is the time limit. So from July 17, if I count, till June 2021, this authority constitutes. So if you have this Reynolds pen, if you have your Natraj pencil, if you see that earlier I was buying for 2 rupees and now also I'm buying for 2 rupees. You have a very good opportunity to learn your GST laws, where you can go and file an application. Like your advanced ruling, there is no application fee. Aramse you can go and file an application saying that, my lord, I have been buying this pen earlier prior to GST, prior to getting into my CA, it was 5 rupees. Even after getting into my CA, it was 5 rupees. Just joking. You can give a try for learning how it works, how the supplier comes forward in terms of explaining or justifying this particular thing. For a moment, if you want to look at the cost sheet of Nestle, it is not that easy for you to get into that. Now, all these big companies have been already filed with these applications, like your what you call Cadbury's bar, your Maggi noodles, then your Atta, Ashirwad Atta, all these food items, whatever we consume, one or the other applicant has filed left and right these applications. And these companies have given enough cost sheets to the authority saying that, no, we have not been unduly enriched with this particular taxation. So friends, this is something which I thought I'll update you on anti-profiting. Now let's come back to our topic of today called returns under GST law. This particular element I was giving in my beginning of the session. Let us not look from examination point of view. Reason, so you're all going to be future chartered accountants. Reading this particular book material is not that difficult for you. I'll explain you the concept which is required for you post qualification, and at the same time for your examination what presentation is required. This slides are taken care from your examination point of view. To start with, whenever I talk about this topic called returns, there are multiple topics what already we have discussed which are dependent on this particular element called returns under GST law. First aspect, my returns under GST law starts when there is a registration which has been taken. If I have taken registration, I have been bound to file my returns. Or if I fail to file my returns, my section 29 cancellation of registration is going to be invoked. So the officer, when he gives me a registration, I have to mandatorily file something called returns under GST law. At the same time, if I fail to file my returns on a timely manner, the officer is going to cancel my registration under section 29. We have all read this provisions of registration under GST law. Also cancellation. One is suo motu cancellation. Second, by an order by the officer concerned. So why will the officer cancel my registration? Because I have been a continuous defaulter. As of now, for composition, continuously for a period of 3 tax periods, they say if you don't file your return, I'm going to cancel your registration. Other than composition, if you have defaulted for a period of 6 months, they say your registration is going to be get cancelled. So first and foremost, my filing of returns is linked with my return. If I file returns, registration is intact. If I default in filing of my returns, my registration is at stake for cancellation. Second element, payment of taxes. When we talk about payment of taxes, we have already discussed at length section 49. Section 49, where what is my CGST ledger, SGST, IGST. There are 3 buckets called CGST, SGST, IGST. How do I avail my input tax credit? How do I pay my taxes? Returns is one mechanism where I'll show this is my outward supply. This is my inward supply. This is my supply on which I'm paying tax under reverse charge mechanism. So whatever taxes I have paid, this returns is one window through which I communicate to the officer concerned. Next aspect is my important availment of input tax credit. For all, please make a note in your working note. Section 41, your availment of input tax credit on estimate basis. Section 41, availment of input tax credit on provisional basis. So if I have filed my return, the input tax what you have shown in your GST 3B shall be credited to your electronic credit ledger, right? So provisional basis, section 41 talks about that. Whenever you file your return, you will avail your ITC. If you don't file your return, there is no concept of availment of input tax credit. Now, if we argue, so there was a purchase for a sum of rupees 10 lakhs. On that purchase, there is a tax of 1,80,000. I have duly accounted in my books on 31st March 2020. I forgotten to show in my returns. So when I filed my returns, when I paid my taxes, I forgot to show one sales of 1 lakh. I also forgot to show one purchase of 1 lakh. My input tax credit on this purchase, my output tax credit on this sale are matching. It's a revenue neutral transaction. Can I argue that? Answer is a big no. Reason, when we talked about section 16, when we talked about section 41, we all understood that my credit is coming into electronic credit ledger on a provisional basis. How? When I file my return. So important, only when I file my return, my input tax credit, that is electronic credit ledger, gets updated. The next important aspect called refund. Majority of you, once you get qualified, one or the other way, you will get yourself entitled or entangled with this term called refund. Sir, can I file my refund application? Am I entitled to get a refund from the department? Is there a mechanism where my current assets, there is an accumulated input tax credit? Can you convert that current asset of receivable from government to cash or bank account? Is there a way, there is a shift from one ledger to another ledger in my balance sheet? Refund is one particular arena. So they say, unless you file your returns, unless you show your entitlement of ITC, your your refund application cannot be accepted. The next important element is your books of accounts and records, where your annual returns under GST law. There's one slide which I'm going to talk about today called annual returns. So my section 35 read with rule 56 says you have to maintain your books of accounts, which will help you to file your returns called annual returns. All the registered persons have to file annual return. When I come to that particular slide, I'll explain you what is the concept for us to learn from this particular element called books of accounts. Next, there are various statements filed under my GST law. So we need to understand there is a difference between a statement and a return. Not everything we file is a return. Not everything we file is a statement. My section 37, if I read my section 37, it says furnishing of details of outward supply. Section 38 says furnishing of details of inward supply. 39 says furnishing of returns. Now, understand, this term returns was not used all occasions. This term return was not replaced for all the filings what we do. GSTR 1 is not a return. GSTR 2B is not a return. What is that? It is a statement. So what is the difference between a statement and a return? Now, statement is just giving the details of transactions. I repeat, a statement is going to give the details of transactions. A statement gives me bill to bill or transaction to transaction based on the nature of your activity. If it is a B2C transaction, I bunch together and show B2C. If it is B2B transactions, line by line, I furnish the details to the authority concerned. I'll show what is the rate of tax. I'll show what is the place of supply. I'll also give what is the HSN. Not from till March, going forward, I'm going to give HSN also along with my GST1. This one table called table 12, where I consolidate my HSN summary. But from coming 1st April, my GST1 also is going to get altered. So statement is not going to conclude what is your tax payable or what is the tax refundable. I repeat, statement is a statement. It is a summary which communicates the details of transactions during a particular tax period. Whereas a return is a particular form where all the details of various statements are consolidated together to conclude whether there is a tax payable or whether there is a tax refundable from the authority concerned. How much tax they have to pay, how much tax they have to claim as a refund. Now, communication of what is the input tax credit, what is the tax payable thereof is communicated together by way of a return. Not all the returns have an obligation to pay tax to the government. Return is just a summary of inflow, outflow. I repeat, return is a summary of inward and outward. That means I'll show what is the purchases I have done during the month, what is the sales or supplies done during a month. That is a two-way window which happens in a return. Whereas in case of a statement, either in relation to sales or in relation to my purchases, I'll just show transaction level information on the basis of requirement of a law. So keep in mind, don't use this term called returns for all the forms what we file. Form GSTR 1, a statement. Form GSTR 2A, Form GSTR 2B is a statement. Form GSTR 3B is a return. Form GSTR 4 is a return, right? Form GSTR 5, again, that is a return. Now, various returns are there. We will understand when we walk through what are those returns which the law has visualized or for us to file. Now, as of now, when we talk about returns, just keep in mind, this talks about your returns under section 39. Section 39, and there is also one more written under section 54, 52. That is your e-commerce operator. I think 52 doesn't talk. Section 39 talks about your returns. So friends, this is something we need to keep in mind when we talk about a return, when we talk about a statement. Next, return is a window, return is a mechanism where the transactions of a business is checked or is verified by the department in the process of their audits. I file returns on a monthly basis. Department comes back and says, Praveen, you filed your return. I see that your sales reported and your purchases reported has no sanctity, because your customers say, your GSTR 2A says that this is the value of your purchase, but your input tax availed in GSTR 3B doesn't match with what your suppliers say, or vice versa. Officer may also say, Praveen, your GSTR e-way bill doesn't match. The summary as per e-way bill doesn't match with your returns. In e-way bills filed for a particular month, you have disclosed a turnover of 40 lakhs. But in your GSTR 3B, you have disclosed a turnover of 25 lakhs. There's a gap. They'll say 40 lakhs is what you have shown in your e-way bill. 25 lakhs is what you have shown in your GSTR 3B. There's a mismatch. There's a mismatch between these two information. This is what is sought by the officer when they compare what information. So the department officers are going to verify my returns for complaints and under various laws. I'll come in a couple of minutes to my Excel file to make you understand how these returns are viewed by the departmental offices, right? This is my third point, what we need to understand. Next, revision of returns. As of now, under GST law, revision of a return is something which is not possible. I repeat, revision of a return is something which is not possible. Now, why we talk about revision of return? As an auditor, as a professional, as a human being, we know that every human being has a tendency to do a mistake. There's a susceptibility of doing a particular mistake when the returns are filed. For the simple reason, my books of accounts or my accounting software is not directly integrated with the common portal, where my data from accounting software can be picked as it is and can be punched into the GST portal. I'll come to my Excel file to make you understand why we have to talk about this particular aspect called returns cannot be revised. Let me come to my Excel file. Now, when I was talking about returns, I'll give a couple of examples. I'll give you a couple of examples which are easy for us to understand. Say there's one transaction of recovery of freight from a customer through a journal entry. 2. Recovery of canteen expense from a vendor through reduction in their supply bill. 3rd, accounting for input tax credit. Accounting for input tax credit for I would say interstate supply as intra-state supply. Now, when I'm talking about returns, say there is a recovery of a freight from a customer. I have not used a sales voucher. We will go back to the basics of our accounting. When I look into my accounting software, I could use Tally, I could use SAP, I could use Navision, Microsoft Dynamics, I can use SAP or various other softwares which are available. Now, this particular softwares, every software has got a functionality or key configuration for capturing the data. Assuming for a moment, this particular recovery of freight says sum of rupees 50,000. I posted an entry through a journal entry. Say Tally is my accounting software. I have debited my vendor. I have credited my freight expenses. What I am doing? Debit vendor account to freight outward account. Now, when I passed a journal entry, this journal entry doesn't know. This journal entry doesn't know, or the voucher entry doesn't know that the GST GLs have to be affected. Now, assuming I have recovered 50,000. And this recovery, assuming it is in relation to composite supply, section 8, where there is a composite supply. And my rate of tax is 18%. If my rate of tax is 18%, on 50,000, 18%. This 9,000 is a GST payable, goes out of identification. This 9,000 goes out of identification. Now, this is the point where I was saying, so what if I have filed my returns? Can I do a rectification? Can I do a revision of that particular return? Under erstwhile VAT laws, under erstwhile service tax laws, we had an option to revise a return. ST3, once I file, I can revise my ST3. VAT, I can revise my VAT return. But unfortunately, neither Central Excise nor GST, this concept of revision is there. That's why they've brought in this aspect called rectification of errors in subsequent tax periods. Now, this is one element I bring to your knowledge as a professional students. Whenever you do audit, if I notice that there was a mistake in a particular month, the law says that particular error I can very well rectify. I can very well take care in a subsequent month return, provided interest payable thereupon is duly paid. I repeat, my provisions under GST law says rectification of errors or rectification of omissions can be duly taken care in the subsequent month tax period, provided if there is any interest payable thereon, you have to pay that particular interest. So this is one principle which brings filing of returns as a very important aspect. If there are any mistakes noted, those mistakes cannot be revised. Rather, rectification is something which is possible. There is a time limit. I'll touch upon the rectification also in a later part. So what if I don't file my returns? Non-filing of returns. What is the exposure and what is the late fee thereupon? Now, please keep in mind, non-filing of returns doesn't call only for late fee. It has got many severe repercussions thereof. One major repercussion is your ITC availment under section 16 subsection 4. I repeat, ITC availment under section 16 subsection 4. My law says, look, you want to avail input tax credit, please avail before the date of filing of a return for the month of September after your financial year. I'll come to my Excel file to make you understand this provision. Now, provisions say avail ITC before due date of filing of return for September following the financial year to which such supply pertains. Now, they say this input tax should be availed before the due date for filing of this particular return of September. Now, say for financial year 2017-18, this is just an example for our discussion. My financial year 17-18 gets over on March 2018. So there is a ITC to the tune of 20,000 not availed. This 20,000 accounted in books as on 31st March 2018. GSTR 3B not filed from March 18 due to working capital issue. I repeat, the GSTR 3B which has to be filed for March 18 was not filed due to working capital issue. Till when? Say, till 31st December 2018. So law says, look, for financial year 17-18, you can take the ITC during July 2017 to March 2018. If you fail, I'll give a further time limit up to 30th September 2018. Means the return to be filed in the month of September. You take the credit on or before 30th September, where in GST 3B. If you have not taken, then you are lost with the benefit of your benefit. My September return, my September 18, assuming for a moment, this has to be filed on 20th October 2018. Now question comes, many of professionals do come back. So September return, I should have filed on 20th October. Assuming I filed this September return on, say, 15th of December 18. Am I eligible? So you're saying it should have been availed till September 18 GST 3B. They say the due date for filing September 18, that is my September return. Before that, I have to take. If I fail to file my return, then the benefit of input tax credit is lost. For that reason, I'll say my returns under GST law is very important, where whatever input tax I have to take within the due date. If you are not availed, then you are lost with the benefit of input tax credit. This is one concept called, when we talk about returns under GST law, we need to keep in mind whatever returns we have to file, my input tax benefit, my refund related benefit, my payment of tax, where I can reduce my interest and penalty. Also, my aspect of registration, which is linked with filing of returns. All these aspects are taken care intact. Most of you, once you get qualified, once you get into practice, once you get into industry, one aspect where you have very good exposure is returns filing. Under GST law, filing of returns is one area where you have a very good practice. So this is one thing which you need to keep in mind. Now, let me see if there are any questions so far. Till now, so far so good. No questions. I believe session is going on well. Okay. Let's continue with our discussion. Next aspect called overview of returns. We will see what all returns are there under GST law. So when I say returns under GST law, first is input service distributor. There is a return to be filed. Under Rule 65 called input service distributor. Next is a return to be filed by TDS or TCS. TDS is a concept where the government entity recovers a tax called TDS when the contract value is exceeding the sum of rupees 2,50,000. TCS, where 1% is a GST recovered when there are transactions done through e-commerce operator. Then there is one concept called final return. When there is a cancellation of return, there is a expectation to file a return called final return. A return to be filed by this gentleman called NRTP, non-resident taxable person. A person who is not a resident of India, when he has to file a return, we talk about a return called NRTP. Next, composition return. Persons who are registered under section 10, where my tax cannot be collected. A person who is not supposed to collect a tax, there's a lesser threshold limit. Like if you have a turnover not exceeding rupees 1 lakh, 150 lakhs, you can be entitled to get registered under composition scheme. There are rate of tax 1%, 2.5%, 2%. These are the benefits which is given under composition scheme. Then casual taxable person. Finally is your other periodical returns, that is your GSTR 3B. These are various returns when we talk about my GST law. It doesn't cover GSTR 1. It doesn't cover GSTR 2A, right? These aspects alone, these forms alone can be considered as my periodical returns. Now, as I say, I'll take you through a couple of examples. It will be an eye-opener for you to understand the practical issues which we come across day to day in our office. People who have not much exposure in indirect taxation laws, you can visualize through these examples what could be the practical issues the clients do come, the assessees do come for your help. And people who have a very good exposure in tax laws, this will give you little more edge of thought process. Let me start with first example. Goods are supplied by LLP and Co, which were written by the customer by issuing a tax invoice. How does the same to be disclosed by the supplier and the recipient? So there is a supplier called LLP and Co. This particular supplier has supplied goods to their customer. That particular customer, he says he is returning back. Now customer is returning back. Now it is a purchase return, right? Assuming the supplier LLP and Co sells goods to Ambika. Now, when Ambika has accounted those goods in her books of accounts, now it is considered as purchase. When Ambika wants to send back those goods to this supplier called LLP and Co, can I call that as a sale return or can I call that as a purchase return, right? Now, by mistake, Ambika has raised a tax invoice. Now, this entity LLP and Co should have account that as an inward supply. Rather than accounting as an inward supply, as a purchase, what LLP and Co have done, they have issued a credit note to this particular customer called Ambika. Now for Ambika, she has accounted purchase, she raised a tax invoice. Now when she checks her return, there's a credit for say 1 lakh. Also there is a credit note for 1 lakh. 1 lakh is getting squared off. 0 is the credit available to Ambika. Why? This LLP and Co have raised a tax invoice, also raised a credit note, which is not as per the law, which is not as per the Ambika, right? Now, Ambika, when she raises a tax invoice, it is a good practice for LLP and Co to account that as a purchase so that the outward tax, what needs to be paid by Ambika, can be squared off using this as a purchase. This is one practical issue where we disclose this particular transaction. When we file our returns, we will have a understanding. Second example, this entity ABC Limited have applied for registration during January 2018, but the officer gave the registration in February 2018. A fantastic practical. Many of you will come across this particular scenario once you start your practice. You filed your application in the month of January, but the officer concerned gave registration in the month of February. How? He gave the registration effective from January 2018. Now, when this officer has given this return is going to be this GST registration effective from January 2018. What would be the return to be filed for the month of January? Now, when you see practically a registration certificate issued by the proper officer, it will say 28th February 2018, the GST registration is given to Mrs. ABC Limited with effect from, say, 15th January 2018. When this ABC Limited, when they go to the GST portal, when they log on to the GST portal, returns window, returns dashboard, January 2018 will not be visible. What is visible? First period will be February 2018. So what will I do? 15th January 2018 onwards, I have been issuing tax invoices. I have collected taxes. I have a customer who wants to avail benefit of input tax credit on my tax invoice. For that, there's one concept called first return. That provision says nothing to worry. From the day your registration is granted, that is 15th January till 28th February, 31st January, all the invoices, whatever you have shown, whatever you have issued from 15th Jan to 31st Jan, you can very well show in your first return, that is in the month of February 2018, and then you can file your return for the month of February. This is one common practical issue most of you will come across. So absolutely not to worry. When my returns were to be filed for the previous period where registration is available, but the window is not available, my concept says all your transactions during that period can be brought into this period and can be disclosed. Third example. Mrs. P. Co. have a registered office in Bangalore and a branch office in Tamil Nadu. What are the compliances if registration is obtained only in Tamil Nadu and not in Karnataka? Now, this transaction says head office is in Karnataka, branch office is in Tamil Nadu. My branch in Tamil Nadu is registered. My head office in Karnataka is not registered. Is it compulsory that Karnataka should register? Now, registration we said, if there is any supply happening from Karnataka, there is a registration required. So there is no registration happening in Karnataka. It is just a register office where my board minutes, the board meetings or the management or the head office, everything is happening here. My correspondence from banker, correspondence from ROC, correspondence from income tax, correspondence for anything happens from, say, Karnataka. Now, this I said PQR & Co. Let us assume it's PQR Private Limited or PQR Limited. Now, here, there's a principle called input service distributor. When a bill comes in the name of head office and head office doesn't want to enjoy that benefit, it is a benefit pertaining to the branch. Using this concept of ISD, input service distributor, I pass on that benefit to my branch called Tamil Nadu. So under GST law, filing of returns, we would recommend the Karnataka to get registered and pass on the benefit of tax through ISD. This is the third example. Fourth example, goods received during first week of April 2018 pertaining to the dispatches made by the supplier in March 2018. Can the recipient disclose the same during April 18 as inward supply, or should it be disclosed in March 2018 as a purchase? Now, this again, you have this accounting standard 9 revenue recognition. The same way your purchases, you have something called purchases, goods in transit. So what if my supplier has dispatched the goods in the month of March? Those goods have reached my factory in April. Should I account that as a credit? Should I account that as a credit in the month of March itself, or should I wait till the month of April? Should I wait till the month of April? This is the question. Practically, we would recommend, please examine your commercial terms. Is it ex-works or is it FOR? Is it CAF? Cost, insurance, freight. Now, what is the nature of transaction? If the ownership passes on at the factory gate of your supplier, the moment goods are given to the transporter, we have this Bailey concept. The moment goods are given to the transporter gets into the shoes of this entity as a recipient of goods. Section 16, subsection 2. You cannot avail input tax credit unless you receive the goods. So in this case, the moment goods are given to me, it is deemed that I have received the goods. Can I take as an input tax credit in March, or should I wait till the month of April and then only avail the credit? So here answer would be, you as a professional would look into the concept of the commercial terms and you will advise, account that in the month of March, avail the credit in the month of March. No. Just because it is appearing in your GST 2A, don't avail the credit. This is what we will advise for reconciliation purpose, right? This is a next example. Input tax credit avail partially by applying block credits formula erroneously. Now, this is one biggest practical issue most of us do come across. Subsequently, the registered person would like to avail the balance credit. Now, I repeat this particular example for benefit of all the students who are going to get into practice very short span. So what if I have accounted the input tax credit? There is a formula called Rule 42. When I'm applying rule 42, erroneously, instead of 15, I have typed as 5-1. I have to apply 15%, 1-5. I have erroneously typed as 5-1. Now, the moment I applied that formula, I should have reversed, say, 25,000. I have reversed 65,000. I have reversed 40,000 more. I have reversed 40,000 more. The question comes here. So, can I avail that input tax credit? Now, here, there are various various tables. When I come to my GST I3B, I'll show you my GST I3B. That is a window where we will, there is an input tax reversal under table 4B under rule 42. Sir, instead of showing 25,000, I have shown 65,000. The question comes here. Can I show that as availment in the next month? Now, there is a matching concept of 1-to-1. I have reversed more than what I have to reverse. What does the law say? What does my return say? Now, there is something called rectification of returns. Revision is not possible. Rectification is possible. So, can I bring and take that particular excess reversal? I would say, as a practitioner, don't claim that excess credit. Write a letter to the department and claim a refund under section 54 for whatever credits you have reversed excess. So now there is a importance called disclosure, where I am showing my returns. In my return, table 4A, table 4B. When I come to the respective form, I'll show you practical examples, practical issues what we will come across. Next, input tax pertaining to a particular branch were billed back to other branch on a turnover basis instead of routing through ISD. Now, this is a concept of whether to register as ISD or not to register as ISD. I would advise, get into a compliance, read the law the way it has been written. Don't take any shortcuts. Just because you have to get one more registration, just because you have to file one more return, don't advise to bill to the other unit. Rather, get into ISD mode. Next, point number 7. Recipient of goods has availed ITC on the basis of a tax invoice issued by the supplier. However, corresponding details of supplier are not auto-populated in GST I2A of the recipient. Now, this is what majority of you as a intern would have come across, where clients do ask. So my customer, my supplier has defaulted in filing his GSTR1. My supplier is not traceable. He is not filing his GSTR1. That credit which I have accounted in my books, can I avail in my GST returns in GST I3B? When I come to GST I3B, I'll show you the respective tables, how to fill the table, how to fill the data, what is expected to be filled in that date table. I'll explain you in detail those aspects. So this is one practical example. Next important aspect, zero rated transactions. Friends, utmost attention is to be paid. Utmost attention is to be paid when I fill my form GST I3B for disclosure of GST transactions. Why? There's one principle called Rule 96. There's one principle called Rule 96 where they say, when you file your GST R1, when you file your GST I3B, your returns is deemed to be an application for filing a refund application for goods. So if I file my return wrongly for zero rated supply, in the case of in a position called B2B, my refund under Rule 96 is stuck. I cannot get my refund. So this, when I come to my respective form, I'll explain how and where this data has to be filled. Again, I'm telling, it is not from examination point of view, from your practical point of view, how we need to collect the data, how we need to present that data, I am going to explain you. Then finally, what all precautions we have to take while filling these particular tables. Each table, when I come through, I'll make you understand what to be filled up. So first, to understand various statements and returns, we have Rule 59, which talks about my GSTR1. Rule 60, which talks about your GSTR 2A, 2B as of now. Rule 61, which talks about my GSTR 3B. So if you talk about my statement, let me highlight only statements. If I talk about my statements, GSTR 1 is a statement. GSTR 2 is a statement. Rest on is a returns. 3B, 4, 5. These are all my monthly returns. GSTR 4 is for composition. It's a quarterly return. So GSTR 1 and 2 is just a statement. It's not a written. Next, what all other things are there? Then I have my ISD written, which is filed on a monthly basis. TDS written, again filed on a monthly basis. TCS written, again filed on a monthly basis. Annual written, which is filed under Rule 80. Annual written, there is a recent budget amendment where Government of India has decided to scrap this concept of GST annual return. Institute material, they have not discussed at length with your GSTR 9. They have brought in very simple aspect called what is the annual return, who has to file annual return, and what are the threshold limit and late fee involved. Just that portion they have touched upon in your exam, your syllabus. Then finally, we have final return. When my GST returns, when registration is surrendered, what is the final return I have to file under my GST law? So first written GSTR 1 under section 37. Let me open my GSTR 1 for the benefit of understanding this particular return. Just give me a minute. I'll come to my GSTR 1. Okay. Let me see. Meanwhile, if there are any questions. There are no questions. So far, so good. Everything is going on well. Now, first statement, that is section 37. Section 37, which talks about your GSTR 1. Section 37, which talks about your GSTR 1. Now, this section talks, you need to file a periodical statement. Now, due dates, examination, don't expect in CA final, what are the due dates for filing GSTR 1? They're not going to ask that. They may ask, what are the details to be furnished in your GSTR 1 file on monthly basis or quarterly basis? So this particular statement GSTR 1 is not applicable to ISD, non-resident taxable person, composition registered person, TDS, TCS, and this section 14 of IGST, Online Information Database Access Retrieval Service. For all this category of persons, my GSTR 1 is not applicable. Section 37 says, my GSTR 1 has to be filed on or before 10th of subsequent month. Now, there's no sanctity of these due dates as of now. If someone asks, sir, can you see what is the due date for GSTR 1? I have to ask, are you in South India or in North India? Second question I have to ask, are you less than 5 crore or are you filing more than, having a turnover more than 5 crore? Third question I will ask, in the last year, have you filed your returns on a quarterly basis or a monthly basis? Now, these are all multiple things I need to look before answering a question called, what is the due date for filing return? So because of this complexity, your examination don't even expect a question asking what is the due date. Very $1 million question. Law says you're not permitted to file your return between 11th to 15th. But this is not implemented as of now. I can file my GSTR 1 at any point in time. Law does not restrict as of now. Now, it says you have to provide various details. I'll come to my GSTR 1 to make you understand this particular thing. I'll share you the GSTR 1 form, which gives you understanding of this particular thing. I hope you are able to see this particular form called GSTR 1. I hope there is a visibility. Now, it starts with the basic information, details of outward supply. My GSTR 1 says, what are the details of outward supply of goods or services? I'm going to say, what are the goods, what are the services which are supplied? Where I'll say, what is a month for which this particular return is being filed? Auto-populated, my GST number, legal name, trade name, aggregate turnover, this all information is auto-populated. Nothing to worry on this particular information. Now, first and foremost, details of outward supply made to registered person. Now, this I call as B2B. This particular information I call as B2B supplies. This table captures my details of B2B supplies. Now, sir, how do I know that it is a B2B supply? This is the reason I would draw your attention to your management information system and audit paper, ISCA paper, information system audit. There's one paper in your group 2. That is one paper which is relevant for you to understand. We do a analysis of your data, database management service, like whatever data assessee is having, we will do an audit of your chart of accounts. In your chart of accounts, how do you capture your data? When I talk about sales, was that sale recognized as B2B or B2C? Sir, how do I know it's a B2B? Where there is a GST number, I call that as B2B. Here, they're asking us to capture my B2B information. First information, B2B, your supplies other than RCM, other than e-commerce operator. So first is your B2B, invoice number, invoice date, value, rate, taxable amount, and the CGST, SGST, IGST, along with place of supply. This is the information captured in my B2B. Supplies attracting tax on reverse charge basis. I'll give an example for this. Assuming Praveen Kumar Gella is a person having a business of tax consultancy. Along with the tax consultancy, I also have a taxi support service, passenger transportation service. I do taxation consultancy. I also have a renting of motor vehicle for passenger transportation. When I give a vehicle to a factory, I'm an individual proprietor. I have a tempo traveler. I have said 10 tempo travelers. I supply this tempo traveler along with the driver for plying of employees to the factory. Now, from my books of accounts, when I raise a bill on my client, who is a company, I'll say, these are the supplies where tax has to be paid on reverse charge. So I'll say, look, this is my turnover. I'm not going to pay any tax. On this turnover, my recipient is going to pay tax on reverse charge basis. Next, supplies made through e-commerce operator. Now, this is one area I would like to draw attention to most of the students who have exposure where if a client comes and says, sir, I'm a small-time business person. Now, my business is not going well. I've attached my business with, say, Make My Trip. I've attached my business with Amazon or Flipkart. Now, what is the difference between all this and running independently? When I have a motor vehicle which is used for transportation, I'm not getting much business. I have attached myself with, say, Make My Trip. Any person who wants to go for an outstation trip, they puts their requirement. The requirement from Make My Trip comes to me. I'll accept the trip and I get a savari for that. Now, e-commerce operator. In case if your client comes and says, so this is my revenue from e-commerce operator, that particular revenue I need to show here as 4C. Though you're selling you're giving the supply to end customer called B2C, that particular portion. Now, if it is a B2B transaction, it will come into my table number 4. If it is a B2C transaction, it will come into my table number 5. So this is one thing which we need to keep in mind with respect to your B2B transactions. B2C transactions. Unregistered person whose value is more than 2.5 lakh. Details of interstate supply. Now, please keep in mind, as we read through the tables, as we understand the returns, so what is that we need to understand? Why is that we need to spend time? From this particular table, we need to go back, we need to travel back, understand the books of accounts of the assessee. For each information, should I export the data into Excel? Should do the jugglery in terms of understanding, okay, this goes to table 4, this goes to table 5. Rather, I being a professional, can I spend some time? I have learned my ISACA paper. Learning that, can I do a customization? Can I do a grouping of my sales into this tables 4, table 4A, table 5A? The moment this particular invoice is booked, I know this is a B2B transaction which needs to come to table 4A. This is a B2C transaction where the value of supply is more than 2.5 lakh. It should come to table 5. Now here, observe carefully. Government wants to capture if there is any interstate supply to whom? To an unregistered person, and the value of that particular supply is more than 2.5 lakhs. Government wants to capture this information invoice level separately. Why so? For your income tax provisions, for your e-way bill provisions. They want to understand who is that particular customer who's having interstate supply, whose value is exceeding 2.5 lakhs. Example, say I want to buy a television. The cost of television is 3 lakhs. So what is the big thing? Now this is a television which is having a touch screen. This is the television which is having a big display. I can write as a board. Like when I have my laptop connected, whatever is there in the laptop, it comes onto the television. I can also use a marker to write on that particular television. So when I'm explaining, all that thing which you can see can be managed using a pen, using a highlighter. Now this is a high-end thing. Now I buy where I don't have a GST number. Government wants to know which state this particular goods are supplied, what is the state where this consumption is happening. Let the tax be remitted to that particular integrated state. Let the tax travel to that particular state where it is a B2C transaction more than 2.5 lakhs. So how do I find this transaction? E-way bill. Please keep in mind, any goods movement exceeding 50,000, e-way bill is compulsory. So wherever there is an e-way bill issued, for a B2C transaction, value is more than 2.5 lakh, it should come and get reported in my table number 5. Now, here, same e-commerce operator. If I have these supplies made through e-commerce operator, I'll bring it to table 5B. Other than e-commerce operator, 5A. Next, table 6. Now, this is a table where I would like to draw attention. All of you are listening to me. You get an assignment from a client for filing of returns. Don't think it is just an easy job of filling the data from the accounting software to returns. Have utmost attention, understand what is the nature of transaction. Let me come back to my Excel file before I explain on zero rated supply. I'll come back to my Excel file. First and foremost, you need to understand the business model. Then understand your nature of customers. Understand the accounting process. This is very important. This is very important for you to understand. Assuming there is a export transaction with payment of IGST. There is an export transaction with payment of IGST. When I have exported sales information, say there is an invoice number, invoice date, there is a GSTN, there is taxable value, there is IGST, CGST, SGST. Assuming only this data is there. Now there is an invoice 1 dated 15th September 20, and GSTN, nothing is there. Taxable value is say 1,48,000. IGST is paid on this for 18%. Now, the moment you see this data, please, because no GSTN, can I consider this as a B2C transaction? Can I consider this as a B2C transaction? Answer is a big no. Is it a zero rated supply? Is what we need to understand. Blindly, now what happens? All of us who are listening to me have done mistakes. Through these mistakes, we have learned, we have come to a stage where we do the analysis of the data. Analyze the data. Now, the moment there is no GST number, how do we know it's a B2C transaction? How do I know it is a zero rated supply? I know that there is a IGST. If at all, if IGST is not there, assuming my taxes is zero, then I'll question, oh, because your tax is zero, it could be export, because my software doesn't allow to raise an invoice without taxation. Now, assuming that this is a scenario where it is a transaction of exports with payment of IGST, where the moment I file my return, I'm entitled to get a refund for this particular transaction under Rule 96. What does it say? My Rule 96 says your GSTR1, your GSTR3B, both will be matched. This data, if it is matching, that data will be matched with your IceGate portal called Customs Portal. How? On the basis of your shipping bill and port code. My shipping bill port code from ICAI portal will be matched with my GSTR one. If both the data synchronize with each other, this 26,640 will come and hit my bank account within a period of 45 days. Now, by mistake, instead of calling as zero rated, if I bring into B2C supply, my GSTR1 and 3P doesn't talk to each other, doesn't meet each other. The same time, ICAI portal shows that there is a shipping bill with payment of 26,000. My GSTR1 says zero. There is a what you call push-pull. When there is a communication established, my GSTR1 says zero. My customs portal says 26,000. Because there is a mismatch, my refund will not be processed. Now, it is very, very impossible for me to travel to my customs authority or travel to GST authority, explain these things, open up my portal, rectify, and then get a refund. Now, by the time client will say, boss, you are not capable of filing returns, let me go and get it done from some other person. That is the reason, first and foremost, you analyze your business model, understand what is the nature of customer. Based on your accounting process, you try to group, make a proper grouping or segregation of data into B2B, B2C, SEZ, then exports, then deemed exports. Have this segregation possible from your voucher itself. When I have a voucher created, is it a SEZ transaction? Is it a zero rated supply? Is it a B2B? Is it a B2C? That is how we need to develop. Now, somewhere, I'm not saying automation is required for everywhere. Have a presence of mind where these issues can be overcome. Let me come back to my GSTR 1. Now here, this table says, look, you have an export, zero rated supply and deemed exports. GSTN of recipient when it is a SEZ transaction. If it is not SEZ, there is no need to give my GST number. I need to give my bill of export. I need to give my port code. Here in this, it is missing. Along with the bill of entry, a port code has to be mentioned. I have to mention what is the integrated tax I have paid. Now, deemed exports, I have CGST, SGST. SEZ exports, section 16 of IGST law. Section 16 of IGST law. This CGST, SGST will not come. Only IGST comes into picture. So please be careful while filling exports, while filling your supplies to SEZ. Keep in mind. Sir, when I have exported goods to Germany, can I fill in table 6B? Answer is no. Reason, table 6A, this data is going to get traveled to my ICAI portal, that is customs portal. So every table which is asked for, you need to read that, you need to understand, pick the data from your books of accounts, punch into the respective details. So table 6A talks about my exports. Next, table 7, supplies net of debit or credit notes to unregistered persons. Now, this is one fantastic area where again, most of you have the issues to tackle with. Let me come back to my Excel file. Friends, all these are the practical issues you have to learn, experience and deal with. I'll give this example this way. May 2018, my written for May 18, if I see, I'll put it this way, state, nature, taxable value, IGST, CGST, SGST. So state Karnataka, supply, outward supply. And my taxable value is 1,50,000. Say IGST is just, I'm putting a hypothetical figures. Don't worry with the rate of tax. So I'm going to say 25,000 and 25,000. Now, same month, Karnataka, my credit note for returns. My taxable value, say 25,000. My IGST is 0 and this is say 2,800. Now, if I have this transaction in my table number 7, I call that as a B2C transaction. I call that as a B2C transaction. So I have intrastate supply. I also have interstate supply. My interstate supply is going to table number 5. My intrastate supply is my unregistered intrastate supply is coming to my table number 7. Right now, what the law says, show the net value 1,50,000. Show this net value. Okay, I think there is a, yeah. Show this net value in your table number. Show this net value in your table number 7. This comes to my table 7. Now, so far so good. What you have said, I have understood. So what if this is a alternative transaction? What if this is an alternative transaction? Just give me a minute. Yeah, I'll call this as scenario 1. Let me repeat this for scenario 2. Now, assuming I have sales of 1,50,000, I have sales written of 2,25,000, and my credit notes is worth 28,000. Now, so what will I do? Can I show negative value? Can I show negative value in my GSTR 1? Answer is a big no. I would say my netting off to the extent of supply. I have to net off to the extent of supply and show that value in my GSTR 1. Government portal, my GST common portal is very dynamic. Every day it is changing because of my trade requirements. Earlier they have not permitted, now they are permitting for negative value. Now here GST 3B, again I cannot show negative values. So the provision says to the extent you have your supply, net off, and the balance you carry forward for the next period where you have this particular supplies. So table number 7, when I talk, they say any debit note, credit note, both needs to be set off, and if it is negative to the extent of supply, show that particular value in your returns. Let me come back to my GSTR 1. In between, you have any practical doubts where you have come across which you need to have a clarity, put it across so that I can take up those questions as well. Let me see if there are any questions so far. Okay. So far, everything is good. No questions posted till now. Okay. I'll come back to my table number 7. Now, we consolidated rate-wise. Now, they say rate-wise outward supply. This is another practical issue. Sir, I have supplied 12%. I have got a returns of 5%. I'll come back to my Excel file again. So if the rate is same, now assuming this is 12% and this is also 12%, it is okay. I'll come to my what you call scenario 3. So what if my outward supply is 12%, credit note is for 5%. So this is, I'll reduce the figures. Now I have outward supply of 12%, returns of 5%. Can I net off? Answer is no, not possible. So here I will not show this negative values in my GSTR 1. Rather, this I'll be showing as it is in my returns, saying that during the month, I have my supplies of B2C to the extent of 1,50,000. Because it is 12, my supply is 12%, my returns is at 5%. My table 7B says netting off to rate wise. If the rate is different, I have a big challenge. Now, this particular thing you will come across, in textile sector. Like example, Mintra, where any clothing which is having a MRP less than 1,000, more than 1,000. Now, this is a case where less than 1,000, 5% is the rate of tax. More than 1,000, 12% is the rate of tax. So if you have multiple supplies which is attracting 12%, I have returns which is having a rate of 5%. Then I have this issue of netting off in relation to B2C. B2C is always a troublesome for small time assessees who are dealing with your textile sector. So friends, when you are dealing with your information disclosure, as the written, as the form talks, please fill the data accordingly. Now I'll go back to my GST Tier 1 again. So here, my consolidated rate-wise outward supply. When I say consolidated, supply, debit note, credit note, all these things I'll consolidate and I'll bunch together. 12%, 18%, 5%. If it is a job work, no, I have to club together. So can I club goods and services together? Answer is yes. Reason, they say rate-wise. I can have 12%, 18% goods. I can have 18% services. I can bunch 18% goods, 18% services together and do the data entry over here. Services, I may not have any credit note, but goods, possibility that there is a credit note. Next, interstate supply. The way you are dealing with your interstate supply, all your interstate supply where value is less than 2.5, I have to give place of supply, that is state-wise. This is one key information. Please keep in mind, based on this information, my IGST is going to flow to various states where it is a B2C transaction. Again, I draw your attention to this point. If I don't fill this data, how does the government knows sitting in Karnataka, when I made a B2C to Tamil Nadu, I made a B2C to Maharashtra. How does the government know when Praveen paid IGST of 50,000, that 50,000, 30,000 should go to Tamil Nadu, 20,000 should go to Maharashtra? That B2C transaction, my state-wise data on this table 7B, it goes. If you see, it says based on state-wise, you consolidate your data and you enter. This is one other data which I have to compile. Again, when I look into this data, your attention. Now, when you read your CA paper, when you read your CA curriculum, if you wonder why I'm reading so many papers, I'm reading income tax, I'm reading indirect tax, I'm reading systems audit, I'm reading my auditing, I'm reading corporate law, I'm reading my costing. Every subject which I read, I apply together as a professional to derive a value addition to the assessee. Now here, when we are doing this returns work, most of you are tech savvy these days. Now, if you see, once you get into the returns filing, most of you have very good hands on Excel. You play around in terms of compiling the data into various tables, data analysis, data analytics. This is the future for you, where you need to read the form, you need to understand your software, you need to see how to pull the data for filling the respective tables. When I say B2C, when I say zero rated supply, the moment there is a GST number blank, don't jump into conclusion that this is a B2C transaction. You need to understand it could be an export, it could be a B2C supply. So how do I know that? When I export my sales register, assuming that there's a GL called sales export, sales domestic, sales interstate. Now, the moment I say my GST number is blank and this data is going to sales export, I'll call that as zero rated supply. This should go to table 6A, if condition. I'll plot my if conditions whereby all your data is intact. Now, this is how we need to learn how to protect your data. Next thing, so there is a human errors which may happen. Now, there is something called in Excel. When you go to Excel, lock a particular data. When data comes from your software, freeze that particular data. When I say there is an option called freezing or locking the data. The moment I lock, I cannot delete, I cannot edit, I cannot multiply, I cannot duplicate or divide. I cannot do anything with the master data. Learn the art of controlling your Excel so that your report generation, your data customization for your returns becomes easier. Also, you as a professional analyze how the data is going to the returns. Next aspect, table 8. nil rated, exempted, non-GST supply. Most of the case, we fill this exempted turnover, we fill this non-GST supply. Now, I draw your attention to this table 8 this way. So when you as a article assistant, when you're doing audit, when your client has given the data, what you will do, you will check into the credit side of P&L. Based on the credit side of P&L, I'll see whether all the information has been captured. I'll come back to my Excel file. To make you understand this particular exempt supply. Now, when I draw my profit and loss account, so this is debit side and this is my credit side. I have sales taxable, sales exempted, services taxable, services export. Then this you have your gross profit or gross loss. Your gross profit or gross loss. Here you have indirect income. What is that indirect income? If I try to look at my indirect income, say I have interest income, I have insurance claim, I also have something called discount received. Now, please keep in mind, all the transactions of my credit side of P&L account, I repeat, all the transactions of credit side of P&L account should come into my table number 8 carefully. So this is one data which will be viewed by the officer, by the departmental officer, whether you are proper enough to disclose your information. If you recollect, notice under section 73, notice under section 74, intent to evade, fraud, willful misstatement, suppression of facts. When you say suppression, a data which is available in your books of accounts, the data which needs to be reported but not reported can be called as a suppression. My section 74 as an explanation for suppression. So you need to keep in mind, the officer, when he is issuing a notice, he will look into all these aspects and say whether you are genuine as I say, where there is no intent to evade payment of tax. Now, if you believe that all this income is non-taxable, absolutely not to worry. You go back and show in your GSTR 1 in table number 8. Important aspect is showing this data in table number 4. Sorry, table 8, column number 4. Never ever miss out to disclose this income. By showing that, you're trying to escape the notice issued by the departmental officer saying that you have an intention to evade payment of tax. So this is the advantage where I bring all the data into my GSTR 1 in this particular aspect. Anyone has got any specific doubt till now? Please let me know. Anyone has got any specific doubt? Let me know. So far, so good. I'll come back to my presentation. Now, table 8 is over, table 9, amendments. Now, this is the area which I was talking about, my rectifications. If you recollect, I said revision of returns, not permissible. Rectification, yes, it is permissible. My GST law says, whatever mistakes you have done, don't worry. Come back to your GSTR 1. In this particular GSTR 1, show the rectifications by way of amendments. This is what the law says. So if at all, if you have done any mistake, including your debit note, credit note, or refund voucher, you can do that rectification. What you'll do, whatever revision you have to do, you will show the original invoice number or debit note, credit note. You increase or you decrease. You change the GST number, whatever you want, you can do that corrections in my table number 9. So this is one concept which talks about your rectification of mistakes, what you have done. Then we have something called advances. So This is table 10, which talks about your unregistered is your registered persons, and this table 10 is for your unregistered persons. Now, table 11 is one challenge for advances. All the advances which I have received during a particular period. My advances received during the month 11A, my adjustment of advances during a month 11B. So when I have issued a tax invoice, the data will come into my 11B. So I have received advance during a particular month, it will come to my 11A. How do you audit this particular data? How do you watch this particular data? What you will do, you will take the data of your sundry datas. You will pick the information of my customers during the particular month. Is there any advances received during a particular from a particular customer? You will maintain a register called advances. All the money received during a month, was it against bill, was it advance? The moment it is an advance, I'll say, was it for goods, was it for services? If you recollect, there was something called payment of taxes. When you receive money in advance, you don't know the nature of supply. They say interstate supply. You don't know what is the rate of tax. They say 18% is the rate of tax. So this is one important aspect you need to keep in mind with respect to advances. Law says 11A for advances received during the month, 11B advances settled by way of issuance of a tax invoice. Next, HSN summary. Not much. I would take your time. All the transactions of your supply of goods, supply of services, I need to mention in this particular table. That is my table number 12. Table 13. Now, this is the audit trail, which is going to help in your monthly audit. You need to fill all those documents. If you recollect, we talked about books of accounts, registers to be maintained. Now, people are planning to specialize in indirect taxation. This is how you analyze. All this data, you will see from where the information is collected. My e-waybill transactions, my e-invoice transactions, my sales and purchases accounted in my books of accounts, delivery challans issued during the month, debit note, credit note issued to customer. No, all these are the transactions I club and put in this table called table number 13. Not that easy, my dear friends. This is what expected when you file your returns. This is all to do with my GST R1. I'll come back to my presentation. Yeah. Now, details of outward supply, section 37, invoice wise B2C, B2B, consolidated B2C, debit note, credit note, etc. We need to show. So when we're talking about this particular section 37, there are a couple of challenges which will come across. With GST number. Now, by mistake, I have, I have to bill to Wipro. I am registered in the state of Maharashtra. I have services given to Wipro in Maharashtra. I also have Wipro in Tamil Nadu. When I raise a tax invoice, by mistake, I have selected the services rendered to Wipro Maharashtra instead of Wipro Tamil Nadu. Now, what will happen? IGST, the credit which should have gone to Wipro Tamil Nadu, has gone to Wipro Maharashtra as SGST, CGST. This is one practical issue we have with respect to raising an invoice where one customer has got multiple GST number. Now, if you look into my customers, I'll not have Wipro Maharashtra, Wipro Tamil Nadu, Wipro Kerala, Wipro Bihar. I'll not have all this. I'll just say Wipro Limited. Now, that particular Wipro Limited has got, 18 locations. I'll enter all 18 locations GST number into this carefully. So this is one common issue we come across when we do audit of the assessee. Second aspect, exempted details. As I said, credit side of P&L. We forget to bring that credit side of P&L into my GST R1. If it is discount received, if it is interest income, if it is insurance, whatever comes into credit side of P&L as an income or miscellaneous income, sale of immovable property, non-GST supply, bring and show that, look, during this month, I sold an immovable property for 30 lakhs. This is my non-GST supply. In table 8, show that as my exempt or non-GST supply. These are a couple of issues which are relevant for us to understand. Next. All this we have discussed. Now, I'll come to my section 39 GSTR 3B. Again, I'll spend little time on this, my GSTR 3B, so that you'll get familiarity with this particular returns what you need to look practically from your experience point of view. Now, this important aspect, GST 3B, they say, no rectification is possible after return to be filed for the month of second quarter or September, or filing of annual return, whichever is earlier. In simple terms, the law says, look, whatever mistakes you have done in a particular financial year, I'll give you 6 months from the end of the financial year. Financial year say 18-19 till September 2019. I repeat, financial year 18-19 till September 2019. Whatever mistakes you have done, erroneous, that mistakes you can bring and offset in this particular data, in this particular period of 6 months. I'll come to Excel file to explain all these aspects where a circular explains these mistakes. Now, error or omission. Now, one, short payment of tax. 2, wrong payment of tax. 3, excess payment of tax. 4th, excess availment of input tax. Now, first thing, short payment of tax. The provision says, look, you have to pay. Now I'll put it this way: actual and as per books, as per returns. Now, as per books, I have to pay tax of 10 lakhs. As per returns, I have paid tax of 8 lakhs. What is the recourse? You pay the 2 lakhs with interest. Provision say there is a circular called Circular 26. Circular 26 of 2017. You have paid short, you have to pay 10 lakhs, but instead you have paid only 8 lakhs. Whatever short you have paid for to the extent of 2 lakhs, you pay with interest in the subsequent period, that is April 2019 to September 2019. I'll presume that this transactions are for financial year 2018-19. So my law says, if at all you have short disclosed your turnover, pay this 2 lakhs with interest till September 2019. So what will happen if I not discover this? Like generally, my books of accounts, when I close 18-19 on or before 30th September, I do the audit, I do a statutory audit, I also give certified financials, and also have to file my IT return. Any discovery, the lawmaker feels that September is good enough for them to rectify. God forbidden, it was not done in the audit and it went beyond September. It goes to October. Then as I said, DRC3 is one option for making a rectification. If I go beyond September 2019, if I go beyond 6 months, DRC3 is one window. We need to think of rectifying these mistakes. Wrong payment of tax. IGST of 12 lakhs. I have paid this as CGST 6 lakhs and SGST 6 lakhs. What they say, don't worry. You pay the proper tax and claim a refund. Under section 77. The provision says, whatever you have paid erroneously, I have presumed that is the interstate supply, but it actually turned out to be a intrastate supply. Pay the proper tax and claim a refund from the department. Excess payment of tax. I have, as per books, I have to pay 15 lakhs. But as per return, data entry mistake, I have paid 25 lakhs. So what does the government say? Just in the subsequent period tax payable. They say you have paid 15, you have to, as per books, you have to pay 15 lakhs. Erroneously, you brought 25 lakhs into your return. That excess payment, now why it happened excess? Data entry. most of the time, not 100% of the assessees have ERP, which is having a no integration or a generation of data in a JSON format automatically. These days, still, I would say 60% of the registered persons who are in Mofussil area, they don't depend on accounting software. They have manual bookkeeping or they have an accounting software, but they compile the data in an Excel file and they give it to the auditor for filing of returns. In the auditor's office, when the junior is bunching the data, in a particular month, 15 lakhs was punched as 25 lakhs. They say, don't worry, whatever excess tax you have paid, within 6 months, till 6 months from the end of the financial year, you can adjust that particular excess tax what you have paid. So what if I'm not in a position to adjust? Then claim a refund. If not possible to adjust within 6 months, claim a refund. Again, I'm talking from GSTR 3B point of view. Again, I'm talking this from GSTR 3B point of view. When I'm doing a data entry, now as of now, it is all auto-populated. My GSTR 3B from July 2017 till December 2020, I repeat, from July 17 till December 2020, it's all manual entry. There is no auto-population of data. Only from January 2021, there is an auto-population of data in my GSTR 3B. From that backdrop, government has set all these conditions when you have done mistakes. Next aspect, excess availment of input tax credit. As per books, ITC is 12 lakhs. As per my returns, I have claimed 15 lakhs. Because of what happened, 3 lakhs, there is a short payment of tax. Now, what do they say? Reverse the ITC along with interest. They say you pay back the 3 lakhs, you pay the 3 lakhs to the government with interest. This is what they say with respect to excess availment of input tax credit. Don't worry, you have taken excess credit. That excess credit, what you have taken, you pay it back to the government. How do you pay? Along with interest, you pay it back to the government. This is what they say with respect to this error. Now, these are the common errors which we come across where my GSTR 3B comes and rescues me in terms of taking care of these issues. Skipping of returns. Now, provision says, look, if you file all the returns, if you have to file September return, unless you file August return, I'll not allow to file September. I don't let you pick and choose. I'll file for April, July, August, then October. I cannot allow you to pick and choose which return to be filed. I'll allow only to file unless the last month return is filed. This month return, I'll not permit to you. This auto population of data, this is something which was brought in, as I said, from January 2021. Now, if someone of you is thinking about QRMP scheme, people who are in your examination preparation holidays, all the students who are in your examination preparation holidays, there's one new scheme called quarterly return monthly payment. This is a scheme which has come from January 2021. This is a scheme which has come from January 2021. For your May 2021, no need to worry about this new scheme for the simple reason this has been effective from, the notification has come on 10th November 2021. There's one rule called Rule 61A. This 61A was introduced in the month of November 2018. For your May 2021, all amendments which have taken place till your October, till 31st October 2021 alone is applicable. So for your May 2021, not to worry. If someone is asking you, have you read your QRMP scheme examination, you may expect one question. I would say this is out of syllabus because of your May 2020, which is curtailed only till 30th October. But for your knowledge purpose, this new scheme called quarterly return monthly payment, what they say, you file your GSTR 3B once in a quarter, but whatever taxes you have to pay on a monthly basis. Your institute material has not discussed anything about QRMP scheme, so you can relax on QRMP for your examination purpose. Next. Okay, before I go to my composition written, I'll come back to my GSTR 3B for making you understand this particular GST attribute. Just give me a minute. Let me open your GST attribute and then give access to that. Yes, my GST attribute file. Okay. Hope you are able to see the PDF GSTR 3B. Let me increase the form file size. Yeah. Okay. Now this is my form GSTR 3B. Again, not from exam point of view. For you, how to collect the information, how you fill this information, I draw your attention to this particular form. Some data which is auto-populated in your GSTR 3B. First table 3.1. This table 3.1 talks about your outward supplies. It talks about your outward supplies. Outward supply and inward supply liable for RCM. My outward supply and inward supply liable for RCM. So this table consists of my sales made during a tax period, purchases on which I have to pay tax on RCM. I repeat, sales made during a particular tax period and purchases on which tax has to be paid. How do we look in 3.A? Outward supply other than zero rated, nil, exempted, that is outward taxable supply. During that particular month, what is the turnover on which I have to pay tax? Here, if you see table 2, 3, 4, 5, this data is auto-populated. No, as of now, it is auto-populated. Assuming if I punch in column number 2, 10 lakhs, my tax in table 3, table 4, table 5 is not auto-populated. Now here, since January 2021, it is auto-populated, nothing to worry. There are blunders prior to that because copy-paste errors. My taxable value was copied as 25 lakhs. By mistake, my tax value, IGST, was also captured for 25 lakhs. When I submitted the return, I have realized on 25 lakhs, I'm supposed to pay 3 lakhs as tax liability. By mistake, IGST was punched for 25 lakhs. So what to do? I did a mistake. I did a blunder. There was no recourse. During July 2017, that 3 months, July, August, September, majority of the people had an issue with this particular table called 3.1A. What happened? Taxable value was copied. Same value was copied in IGST or CGST or SGST. The juniors didn't know that this is an auto calculation. Reason, under VAT, the moment I captured 25 lakhs into 12% is calculated automatically. They didn't read or they didn't know how to fill. By mistake, 25 lakhs was punched into IGST. During that period, there was a reset button which was given for GST 3B. As of now, that reset is not there. Thankfully, auto-populated of this data from my GST 1 comes in. So what I need to do, I just need to check and confirm. Next, outward supply zero rated. Outward supply zero rated. My 3.1B, my zero rated. This includes exports, SEZ supply. These two data I have to fill in my table number B. I repeat, SEZ supply and actual exports should be filled into this table number B. So why do I do that? Section 16 of IGST, any exports out of India, any supplies to SEZ will be called as zero rated. That information I need to fill here. I draw your attention as a future chartered accountant. How? Sir, I have an invoice raised on my SEZ customer. I haven't charged IGST. While filing my returns, by mistake, I showed that value in outward taxable supply. I repeat, sir, I raised an invoice for 2 lakhs. This 2 lakhs I have billed to a SEZ customer called consultancy services. I don't know that 2 lakhs should be shown in taxable supply zero rated. I have shown in taxable supply outward, where IGST, CGST, SGST is shown. Is this correct? I would say it is not correct. Procedural lacuna. The law says show zero rated in 3.1b. By mistake, I've shown in 3.1a. Then it goes for a toss. Law says whatever zero rated, if it is SEZ or if it is exports, should be shown in my 3.1b. So what can I do? Can I reduce my 3.1a of next month and can I show in my 3.1b of second month? The answer is I can do that for the presentation purpose, but respective individual months, if I see GST Tier 1 and 3B, there will be a mismatch. The departmental officer may send an inquiry to rectify your mistake, because my section 39 says if I have done a mistake, do the rectification in the subsequent months till September of next month. So please, you increase your zero rated supply in the next month. To that extent, reduce in your 3.1A. That is one recommendation I would say to overcome your mistake of disclosure. Third, outward supply nil rated exempted. Now, exempted like rental income from immovable property used for residential purpose, renting your transportation of passengers, tax to be paid on RCM. So my turnover, which is exempted. Why exempted? I need not pay. My recipient has to pay. I'll bring that as my outward supply exempted. Non-GST supply, your schedule 3 transactions or your non-taxable, I'll bring and show in my E column. Inward supply, liable to RCM. Now this D column, my purchases, GTA, advocate services, or your director services, import of services, all those transactions, and I'll come and show in my table number D. This is how I disclose my inward supply on which I have to pay tax on RCM. Look at this carefully. Again, 3.2, it asks, please show your interstate supply made to unregistered person. Why? Government wants to know whatever IGST you paid, to which state how much I have to give the benefit. To give the benefit of that IGST to the respective states, they expect you to fill this table 3.2 ITC. Now, I'll spend little time because this is a hardcore understanding of all of you. When you are filling your data in table number 4, eligible ITC, this is one important data you have to give utmost important attention. Now, these days, as I said, all of you, when you've come on your examination leave, a lot of changes happened in the returns. One of that change, auto-populated data in table number 4. Import of goods. When I import material where I file bill of entry, I pay customs duty along with IGST. That is called import of goods. My data from ISGate portal is auto-populated in table number 2. Now, if at all, if I imported goods through courier mode, that data alone is not coming. I have to manually do the data entry for import of goods. So as of now, please understand, when I say import of goods, during that particular tax period, where I have filed my bill of entry, the material was received at my end, that data I have to fill in my 1. So with respect to bill of courier bill of entry, that is not auto-populated. I need to manually key in. Next, import of services. All those services where I have accounted as import, Form 15CB has been issued, Form 15CA is given to the banker. Those services where there is a foreign currency on which I have incurred, those services where I have paid tax on RCM should come into my table number 2. Third, inward supplies liable for RCM. Any service provider either registered under GST, any service provider not registered under GST, my GTA, my legal services, sponsorship services, or your security service, motor vehicle service, any of those RCM where I as a recipient have paid tax, come and show in table number 3. It is important to show this bifurcation. If I don't show, there is a penalty under 125, general penalty. Not to like data has to be shown in respect to tables, not complied. A general penalty can be invoked for penalty of 25,000 under CGST, 25,000 under SGST law. Next, inward supply from ISD, input service distributor. I'll not spend much time. Whatever credits I get from ISD, I need to key in that data properly. All other ITC. Now, this is the main essence of a chartered accountant under GST law. Take it from me. All the students who are listening to me, this table number 5, all other ITC. This is one area where majority of the assessee, majority of the clients depends on a professional for reconciliation of the data. I'll spend little time for you to understand. My all other ITC is nothing but when I look into my books of accounts for that particular month, what is the ITC available in my books? I say ERP. In your ERP, line wise 1, 2, 3, 4, say 300 line items. All 300 line items where my supplier has charged GST on me, that data I have to bring in over here. I'll come to Excel file to demonstrate this particular table for your ease of understanding. I hope you are able to see my Excel file, all other ITC. Now, as per books, bill wise information. Second, details to capture. What details? I'll put it here. A, GSTN of supplier. B, invoice details. That is invoice number and invoice date. C, your description. Goods or what is the description of goods or services? D, eligible. Is it eligible for ITC? Yes or no? E, your taxable value along with IGST, CGST, SGST. Next, HSN or service accounting code. Please ensure that this basic information is available from your software. The main important aspect is now there is something called GSTR 2A, GSTR 2B. Again, all the students who have come on an exam leave where you have stopped your support in filing of returns. This is something which has been a development from since 1st January 2021. My auto population of data in 3B. As per GSTR 2B, auto population of data is happening in my GSTR 3B. Now, one issue is, I'll not get into, okay, I'll explain you GSTR 2A, I'll also explain you GSTR 2B. GSTR 2A is on the basis of filing. GSTR 2B is on the basis of due date, filing within due date. Filing within due date. I'll put it this way. Say, I'll put the tax period, then filing date. And I also put one column called file within due date. File within due date. Now, tax period, say May 2018, filing date. I have to file by, say, 11th of June. The filing is done on 15th June 18. Filed within due date, I would say no. GSTR 2A will be updated. GSTR 2B, no for no for May 18. Yes for June 18. Now, yes for May 18. Now, what I'm trying to say, it's not Greek and Latin. This is how students, if you feel this is complicated, if you feel this is really absurd, now please take it from me. My law is that way. My returns are that way. We don't have a choice. As a professional, we have to live with the law. I cannot question. I cannot argue. Lawmaker is asking me to track this way. I have to do tracking that way. I cannot question anything. No. I'll explain this once again. Please follow carefully. My tax period is May 2018. My GSTR 1 filed on 15th June. My due date is 11th June. Is it filed within the due date? Answer is no. It is not filed within the due date. Now, will GSTR 2A get updated for this filing? Answer is yes. In which month it will get updated? It will update in May only. Though supplier has filed beyond the due date, the data will go and sit in May 18 as if it was filed. When I look into my GSTR 2B, when I look into May 2018, there is no data. That supplier was to upload the sales for May 18, uploaded beyond the due date. For May 18, I as a recipient, I as a buyer, when I look into my GSTR 2B, there will not be any data. There will not be any data from that particular supplier. When I travel to the next month called June 18, because this supplier has filed after the due date, entire the data will come and sit in my June 2018. This is what is going to happen. This is what is going to happen in my GSTR 2B. Hope you have understood how 2A is functioning, how 2B is functioning. People who feel that, sir, it is a waste of time, I would say, yes, but when someone asked you to file the returns, when someone asked you to support the returns, you have to get into this mode of understanding. Majority of you, once you get into practice, this is the first job you're going to get. Reason, majority of the SSC doesn't have expertise, they doesn't have a skill set to understand the law changes. And that is the reason you will find only few people who are into practice of indirect taxation. Income tax, there are many people. Now, coming back to my all other ITC, what the law, this lawmaker, you avail ITC only on the supplies made available by your supplier. That is GSTR 2B. This is what they say. So I have to prepare a reconciliation like bank reconciliation. Amount as per books, amount as per passbooks. In between, I'll say checks deposited but not cleared, money received but not accounted, bank charges appearing in passbook not accounted in the books. The way I do a reconciliation for bank reconciliation, I need to do reconciliation like this. Amount as per books, amount as per GSTR 2B. Now, here I'll say add credit populated in portal, not accounted in books, less credit accounted in books, not populated, add credit short populated, less credit excess populated. Now, this is how I do adjustments. This is how I do adjustments and then come to a conclusion saying that this is how my books versus 2B is matching. All this is something which I have to do on a monthly basis. That is the main reason why professionals are most sought out in this particular filing of mechanism. Next, having understood all other ITC, there is something called ITC reversed. ITC reversed as per rule 42-43. Again, I draw attention of all the students who are listening to me. When we disclose table 8 in GSTR 1, so what is your table 8? Non-GST supply, exempt supply. Is there any input tax to be reversed on account of section 17? Where rule 42 has to be applied. Rule 42 on input and input service, rule 43 on capital goods. While studying my input tax concept, we have studied rule 42-43. So month on month, when I am doing a reversal, I need to come and show in this particular table. That is the rule 42-43. There is something called others. So what do you mean by others? Debit note. During the month, I have purchases which was written to my customer. I have received purchases. That purchase, because of quality issue, I have written back to my supplier. So I'll say ITC reversal others. Or I have accounted credit of 15,000 instead of 12,000. Again, I'll reverse that under others. Next, ineligible ITC as per 17.5. I am declaring that, look, when I have purchased the 17.5 list which is given, all these are the purchases I cannot avail ITC. So whichever is auto-populated in my GSTI to be, I'm going to declare that it is my ineligible credit. That's what they say. Let me come back to my main presentation. So when we are filing our monthly return, this particular section 39 expects you to take care of all that aspects. Next return we have in our discussion is composition supplier. So if there is a return to be filed by composition supplier who is registered under section 10, by rule 62 says that this composition supplier has to file a simple form called CMP08, which is on a quarterly basis, and one annual return called GSTR4. Let me do the annotation here. My quarterly form called CMP08. CMP08, a very simple form. Your monthly supplies, whatever monthly supplies there on that CGST, SGST, 1%, 2%, 5%. Then inward supply on which RCM is payable, on which you have to pay tax. As a composition fellow, you cannot take ITC. So what you will do, you will just show your outward details, and your inward supply, you will pay tax through cash ledger. And the annual return, this composition on or before 18th of a subsequent month of the quarter. April, May, June, first quarter, I have to file by 18th of July. July, August, September, I should file by 18th of October. So every quarter, from the end of the quarter, within 18 days, I have to file this form called CMP08. If two consecutive tax periods, like CMP08 was not filed for 2 consecutive tax periods, my GST registration will be cancelled. Next, coming back to my GSTF4, it's once in a year, that is annual basis, I have to file. How? I have to file on or before 13th day of my end of the financial year. This is what they say. Form name GST C8, and they say if you don't have any transactions, please file a nil return. If you don't file nil return, again that is a offense where they will call for late fee along with a penalty. This is what we need to keep in mind. Now, when I come to late fees slide, I'll explain you how much is the late fee involved. NRTP, again, it is a very simple form called form GSTR5. I file for non-resident taxable person. Please keep in mind, NRTP will not file GSTR1. He will have one simple data. What is the imports when he has come into India as a non-resident? When he has come into India, what are inputs, what are capital goods he has imported? On those inputs, what capital goods, what is the tax he has paid? He'll show his bill of entry number and the taxes paid to the government. And of that, during the month, what is the supplies, B2C, B2B? What is the tax payable? What is the ITC eligible? What is the tax payable? Net off and pay the tax in cash ledger. This is the return for NRTP. On or before 10th of the subsequent month, he has to file his monthly return. A return called ISD. Now, as the name goes, Input Service Distributor, a very simple return. This ISD, again, too technical for people who have zero experience in indirect taxation. I will not complicate or confuse you. I'll put it very simple this way. You have something called routing account. You have something called routing account. Why do I use a routing account? Something comes into that account and it needs to be passed on to the respective account, a suspense account. When money has come, I don't know from where it has come, I put into a suspense account. From there, once I identify to whom I have to give, I'll pass on to the respective ledger. Same way, I have a head office. All the common credits, services, all the common credits come and get registered in my ISD. From ISD, respective units, like when we have read section 20, I will formulate an equation to distribute to the respective units. Keep in mind, when I distribute examination, a 3 marks 3 question can be expected. What credits needs to be distributed? I distribute eligible credits. I also distribute ineligible credits as a ISD, When I receive credits, whatever credit has come into my ISD, I'll distribute as a credit eligible. I also distribute as a credit ineligible. This is what I have to do. Important thing, my due date for filing of this return, is 13th September. Sorry, 13th of subsequent month. 13th of subsequent month. Next return of TDS, form number GSTR 7. All the government entities where the contract value is exceeding 2.5 lakh, where TDS has to be deducted at 2%, they will file a return called GSTR 7. This has to be filed on or before 10th of subsequent month. Now, please keep in mind, a supplier on whose bill TDS is deducted by the government entity, that TDS, once the supplier files his the government entity files their form called GSTR 7, this money comes into the cash ledger of the supplier. The supplier has to accept the details uploaded by the government entity and claim in the electronic cash ledger. Now here, TDS is not auto population into the cash ledger. Every supplier has to log on to their GST portal, open the window called TDS credit received. Now, if I have raised 10 bills to my government entities, all those government entities have detected in their file form called GSTR 7. I'll say yes, yes, yes. These are the bills I have issued and this credit I'm entitled for. The moment you say yes, it comes and sits in your electronic cash ledger. Now, story does not end over there. Wherever you have said yes, the government portal is going to cross-check your GSTR 1 to say whether this money was actually billed to that particular government entity. That is how they cross-check with respect to your TDS. Next. First return. We have discussed this concept of first return. My application was made in the month of February, but my application was permitted in, I filed my registration in January. My registration was approved in February, effective from January. So this first return says all your supplies from 15th January till 31st January, whatever invoices you have issued, those invoices please disclose in your first return called February 2018. So this section 40 says that any registration, if at all, if it is dated to previous date, that data you can file in this particular first return. Then e-commerce operator, all your supplies through e-commerce operator, TCS, where it is applicable. The government says GSTR 8 has to be filed. It is on a monthly basis. As of today, a final annual statement to be filed, 9B, it was not enacted for e-commerce operator. Only a simple monthly return called GSTR 8. Again, this is one form where a lot of work is involved. There is something called CEO, CFFO. Similarly, CDO, Chief Data Officer. Now, after GST has come in, there are key specialized professionals appointed only for these returns. Why? If you have a inclination for data analysis, to do data mining, these e-commerce operators are paying heftily to recruit professionals only to do this job. Reason, the volume of data which comes through this particular window is enormous. Systems audit, systems knowledge, and setting up of masters. Very, very highly paid profile to manage the GST returns in this e-commerce operators. Reason, when a departmental inquiry comes, how you collect the data, how you give the reconciliation, how you manage the day-to-day operational issues, it is mind-boggling activity. I repeat again, if someone is serious to make a very good career, I would say this is a fantastic area. This is a fantastic area where there's a very good opportunity for you as a data analyst operator. Reason this e-commerce operator, all those supplies which are taxable under GST law, 1% TCS is recovered. That 1% TCS has to be uploaded on a monthly basis using a form called GST rate. Keep in mind, when I say supplies through e-commerce operator, the net supplies, sales returns. Now you have a sale return policy. If you buy anything on Amazon or Flipkart, they say any returns within maximum 7 days you have to report. Beyond 7 days, we don't entertain. Reason, they have to reconcile this supplies, the value of sale, the value of return. If both have to be netted off, and then TCS. There's a cash flow issue. Any money recovered as TCS, 1% should be paid through cash ledger by e-commerce operator. That is the biggest challenge they have. Reconciliation of supplies, reconciliation of returns. That is the reason I would recommend very good opportunity for people who are interested to get into this line. We come to the next aspect called annual returns under GST law. Now, this I would expect one question. This May 2021 attempt. Reason, I would say this is a sunset clause for your November 2021 attempt. Reason, recent budget amendment, the Honorable Finance Minister has pronounced to squash this section 44 from the GST law itself. I believe this attempt of May 2021 is going to be the final attempt where this section 44 is going to put for a test. So please expect one 4 marks theory question from your examination point of view. Explain the concept of annual return. What do you mean by annual return under GST law? So I have summarized in simple for your understanding. Annual return is a concept where all the transactions of a registered person other than CTP, NRTP, ISD, TDS, TCS, OIDR, except these 6 set of people, all registered persons have to file a form called annual returns under GST law. What is the due date? As per the law, 31st December, 9 months from the end of the relevant financial year, is the due date for filing the annual return. Now, as of today, there are various due dates extended under the GST law. Don't worry from your examination point of view. You will just reproduce your act as it is. What you will say, as per the GST provisions, 31st December due, 9 months from the end of the relevant financial year, that is 31st December of the subsequent financial year, is the due date for filing my annual return. However, Commissioner may, by a notification, extend the due date for various reasons thereof. So this you will say, all registered person have to file a form called annual return. Now, how do they file? When do they file? On or before 31st December of subsequent financial year. Next, as of now, there are 2 forms called, one GSTR 9, second GSTR 9A. 9B is not yet notified. So as of now, examination, don't worry. There are only 2 forms called 9 and 9A. GSTR 9 and GSTR 9A. GSTR 9A for those registered persons who have opted for composition. I repeat, those registered persons who have opted for composition will file GSTR 9A. GSTR 9, all those registered persons who are not in composition. I'll give an example. Financial year 18-19, financial year 18-19, ABC and Co. have registered under composition scheme. During September 2018, this ABC and Co. have exited out of composition and got into regular scheme. Why? They have violated either one of the provisions or threshold limit of turnover has been exceeded. Now, examine what return has to be filed under annual return. Answer would be, for the first period of 6 months, ABC and Co. will file GSTR 9A. For the next period of 6 months, October to March, they would file a form called GSTR 9. So answer would be, all registered persons except CTP, NRTP, ISD, TDS, TCS, OIDR, they have to file a form called annual return. GSTR 9A for composition registered person, GSTR 9 for a person who is other than composition registered person. As of now, GSTR 9B applicable for TCS, not notified, no need to discuss in your examination. Next, moving on. There is a Rule 80 which says, look, along with your reconciliation statement under section 44, file your audited financial statements. They say you have to file your annual return as per section 35. Also, along with that, a reconciliation statement along with audited financial statements. They say when you're filing your annual returns, it is expected that you file a reconciliation statement in GSTR 9C and also audited financial statements. Now, this is a whole aspect which is tested in your examination. What do they say? Any registered person whose turnover exceeds 2 crore, any registered person whose aggregate turnover exceeds rupees 2 crore should file annual return GSTR 9. Along with that, a reconciliation statement called 9C, and the books of account should be audited. Let me come back to my Excel file to explain you carefully once again this aspect. Annual return, Rule 80. Aggregate turnover exceeding rupees 2 crore, GSTR 9C, which is called as a reconciliation statement, and books of accounts have to be filed. This is what they say. Now, when I say aggregate turnover, please keep in mind turnover of all the registered persons in across India. It is not turnover in state. It is aggregate turnover, which we have discussed in various classes, even for registration. So if the assessee has got a turnover, like say financials, turnover is say 180 lakhs. Then my inter-unit transfer, stock transfer is 30 lakhs. Then GSTR 9, yes, to be filed. Reason, my aggregate turnover includes the stock transfer. So, another example. Financials shows 120 lakhs. My sale of immobile property is 100 lakhs. My aggregate turnover for the purpose of GST law is 120 lakhs. So, annual return not required. Right? This is how I need to do the calculation of aggregate turnover and give a confirmation that the annual return is applicable, yes or no. Examination, again I am telling you, please expect a 4 marks question from your annual return. Reason, this is going to be sunset clause for this concept of section 44. This concept is going to be the end of this attempt. After May 2021, we don't expect a annual return because of your recent budget amendment. Be prepared and watch for a computation of aggregate turnover, applicability of your annual return. If annual return has to be filed, GSTR 9, reconciliation statement in 9C, and audited books of accounts is required. Now, so what if no audit is done? Say, assessee having house property income of rupees 5 crore. Now, if this assessee is an individual having an income from house property exceeding 5 crore, no 44AB, no Companies Act, nothing. Only for the purpose of GST, there is an audit to be done, and then we have to file something called reconciliation statement. So, audit of books of account is compulsory. Let me go back to my presentation. So, this audit, who can do audit? Audit can be done by a chartered accountant or cost management accountant, where the aggregate turnover during a financial year exceeds 2 crore. For the purpose of calculation of 2 crore, my stock transfer, if there is any stock transfer from one unit to another unit, that also has to be taken into consideration. This is one important aspect we need to keep in mind. Now, for financial year 18-19 and 19-20, for first financial year 17-18, 2 crores was a threshold limit. For these 2 years, 1819 and 1920, this aggregate turnover from 2 crores, it was enhanced to 5 crores. I repeat, my aggregate turnover has been enhanced to 5 crores. Then, deemed filing of the annual return for a registered person less than 2 crores. Now, this provision, annual return, says that, look, any assessee whose aggregate turnover is more than 2 crore, filing of return is compulsory. So what if the registered person is aggregate turnover is less than 2 crore? Then there's a provision saying that it is deemed that the assessee has filed annual return if he has not filed the return within the due date. That means the government said we don't want to burden the small time people. If they have not filed their annual return, I presume that it has been filed on the due date. For whom? Whose aggregate turnover is less than 2 crores. Next, final return. Final return I have to file in my GSTR 10, where the registration of a person who is filing a returns on a monthly basis has been cancelled. So if your registration is cancelled, you need to file a simple form called final return and then get away with your compliance. Notice for return or default. This provision says, section 46 says, look, you have to file your return. If you fail to file your return, there is a notice to be served under 46 within a period of 15 days. If you don't file within a period of 15 days, then your summary assessment and other provisions will start by the department. Next, late fees. In case if there is a late fee, sir, I have to file my returns, but I have not filed my returns, then what is the late fee? As of now, law says any GSTR 1, GSTR 3B or final return. If you have not filed any of these returns, or if you filed belatedly, then lower of 100 rupees per day or maximum or 5,000. Either of these two, whichever is lower, shall be collected as late fee. Now, please keep in mind, if I don't file GSTR 1, GSTR 3B or final return within the due date which is specified, then there is an applicability of late fee. How? 100 rupees per day under CGST, 100 rupees per day under SGST. 100 plus 100 was made to as 200 rupees. Government has later relaxed this particular thing, saying that, look, I don't want to burden the assessees. If the assessee is filing a nil return, that 100 rupees should be read as 10 rupees. If the assessee is filing not a nil return, that 100 rupees should be read as 25 rupees, 25, 50 rupees. So maximum 5,000 is the late fee applicable. So what if in case of an annual return? Now this is one fantastic provision. If you have to file my annual return under section 44, but not file, lower of 100 rupees per day under CGST, 100 rupees per day under SGST, 200 or 0.25% of the turnover in state. Please be careful. All the registered persons, 17, 18, many of the people who have a turnover more than 2 crore. I was talking example of my financial says 180 lakhs. Because of stock transfer, there was an excess turnover of say 200, exceeding 2 crores rupees. Now, if I consider aggregate turnover, even stock transfer has to be kept in mind. If I have to file but I forgot, my exposure is up to 0.25% of the turnover in state. So friends, this is something called late fee under GST law. With this, we come to the end of our discussion for today on the topic called returns under GST law. Quickly, let me see if there are any questions to answer. Yes, there are a couple of questions. Let me take one by one. There's one question from Sankal. It means interest is also applicable, need to be declared. Yes, Sankal. If at all, if I have an interest income from a bank fixed deposit, I have shown interest income in my profit and loss account, that needs to be brought as a exempt supply in my returns. Then if I draw your attention to notification 12 of 2017, whereby the government has exempted my interest income from taxation. For that reason, yes, I need to show my interest income in my GSTR 3B. Answer is yes. Venkat has asked one question. In GSTR 1, we are disclosing zero rated. In GSTR 1, we are disclosing zero rated, non-taxable, but it is not auto-populated in 3.1 BC. It has to be auto-populated, Venkat. If it is not auto-populating, something is wrong. But it is again from 1st Jan 2021, it is happening, Venkat. There's one more question from Sankalp. As you say, it's complicated process. 2B and 2A, then why our IC is not talking with government? Sankalp, this is a policy decision. I understand your point. When when the tax laws are complicated, why the tax laws are complicated? Keeping in mind the tax evasion, keeping in mind the leakage which is possible in the system, the tax lawmaker will try to collect as much as information possible. In the process of that, if the returns are made complicated, it is a policy decision. None of the professionals, none of the trade bodies can question in any court of law. Assuming if I go to a court of law, court simply says, look, this is a policy decision of the government. I don't have anything to do with this. Please go and comply with your law. Then Ambika has said, but recipient can get benefit of Rule 36(4). Yes, Ambika, your point is valid, ma. When I was trying to compare my GSTR 2A with books or books with GSTR 2B, Rule 36, there is a principle of 10%, which was reduced to 5%. Originally, Ambika, during 2019 October, when this provision was made, 20% was a credit which was permissible. Later, from Jan 2020, the 20% was made as 10%. Later, from recent November 2020 onwards, that 10% was made 5%. I believe you have gone on your exam leave. As of now, if you read your Rule 36(4), the 10% was also brought down to 5%. Finally, there is one question from Kirtana. Suppose one invoice reflecting to be in January month, but invoice is not accounted in the books in that month and also not claimed in January. If it is accounted in February, the invoice is accounted in 3B. Can we claim ITC? Answer is yes, Kirtana. This is the reason why the clients do depend on chartered accountants, the professionals per se, for getting the benefit of computation of ITC eligible. So answer to your question, Kirtana, yes. I have got the bills in subsequent month. Like my supplier uploaded his returns in January. I have received the bill in the month of February. I have accounted this particular bill in the month of February. So answer for that question, yes, Kirtana. With this, I come to the end of my presentation and discussion, and I've answered all the questions, whatever have been raised till now. And I would thank all students for your patience listening and also sharing your experiences and posting the questions in the process of discussion. I believe I did a justice to enrich you with the knowledge, whatever I can do in whichever way possible for your examination. This is my last presentation for this particular session of series of classes. I thank Board of Studies for giving this opportunity and all the students who have made a patience for listening all along. All the best for your May 2021 exams. And one tip for your examination, all those provisions which are going to be sunset provisions like annual return, what I've said, those sunset provisions, please pay attention from your examination and focus on your RTP, which is going to give you an indication, which is going to cover 30% of your examination questions, key questions from the recent amendments. 30% recent amendments from RTP. So stay focused and read your examination carefully. With all this, I would say all the best for your examinations. Come out with a colored, brightful results and come and join the fraternity. See you all. Stay blessed. Good night.